Hello students. So let's start with your first chapter, that's material, and in the material now we are going to discuss a basic concept first of all. So what is this material? Okay, so let's start then. So our first point for discussion today is meaning of material. Meaning of material. Okay, so material is basically all items used in the manufacture of final product. Okay, so when you manufacture any final product, all items which we use in the manufacturing is known as your material. Now let me give you some simple example to understand this. Example number 1. For example, your final product is a table, okay, and it's a wooden table. So to manufacture a wooden table, what all materials you would be requiring? What all materials that would be used in the manufacture of this table? So you will say, sir, we would be requiring wood. So wood is our material. We would be requiring some nails. Okay. We would be requiring some glue also, oil also for the machineries with the help of which we manufacture this table. So all these items, wood, nails, glue, oil, is your material. Let's take another example. Suppose you are manufacturing pen. Okay. Now in order to manufacture a pen, you need plastic. Let's say this is a plastic pen. So obviously plastic is required. You also need ink. So ink is also your material. Then there will be a machine where this pen is basically manufactured, molded, everything. Now that machine requires oiling. So again your oil is your material. Okay. Let's take another example, one more example, so that we make ourselves very much comfortable with the concept of material. Okay. Suppose you are manufacturing plastic toys. So for manufacturing plastic toys, again you need plastic. So plastic is your material. Okay. And what all things you think that you would be requiring for the manufacturing of toys? Oil. Okay. Cleaning supplies. Okay. Stationery items. Okay. Safety gears for your employees, for your labor in the factory. This is also your material. So basically the material, the word material covers all items which we use in the manufacture of final product. Okay. Now let's see the types of material. Now this is a very important discussion which we are going to have now. Types of material. So there are two types of material. A, direct material. So first we will focus our discussion on what is this direct material. So understand, direct material is something which is incorporated, okay, which is incorporated in the final product, okay, and directly attributable, and its cost, okay, its cost is directly attributable to the final product. Okay. Now let's understand this. So now let's see what is direct material. So direct material is something which is incorporated in your final product. Okay, incorporated in final product means that which has been used in the manufacture of final product, one thing. Okay, and second thing, the cost of direct material is directly attributable to the final product. So now let's understand this with the help of simple example. Okay, suppose you are manufacturing pen. Okay, now one pen requires, let's say, 2 kilograms of plastic. Okay, one pen requires 2 kilograms of plastic, and the rate of plastic is at the rate of rupees 5 per kilogram. So now if I ask you, what is the cost of material plastic? What is the cost of material plastic for manufacturing one pen? You will say, sir, for one pen we need 2 kilograms and the rate is 5 rupees per kilogram. Therefore, the cost is 2 kilograms into rupees 5, that is rupees 10 per pen. This is the cost of material for manufacturing one pen. Now, let's say I am manufacturing 100 pens. So, for manufacturing 100 pens, okay, what will be my plastic cost? What will be my material cost? Very simple calculation. You will say, sir, for one pen we need 2 kg. So, therefore, for 100 pens into 2, we need 200 kg. Okay, and 1 kg's price is 5. So, into 5. So, 200 into 5, that is rupees 1000. So, that means for manufacturing 100 pen, 1000 rupees is your material cost. So, see, it's so easy to calculate the cost of material, okay, for one pen and then for 100 pens. So, that's why this line says that the cost of direct material, okay, the cost of direct material is directly attributable to the final product. You can just pinpoint and say, sir, okay, this 10 rupees is the cost of one pen. 20 rupees is the cost of 2 pen. 1000 is the cost of 100 pens. Okay. So, direct material is something which is incorporated in the final product used during the manufacturing process and its cost is directly attributable to the final product. Okay. Now, let's move to the discussion of second type of material. Okay. Second type of material is known as indirect. Okay. Now, let's have a discussion on indirect material. Now, indirect material is a material which is like an ancillary material. Okay, it is like an ancillary material. What do you mean by the word ancillary? Sir, ancillary means which works as a supportive. Okay. So, if you are manufacturing a final product, there are certain types of material which play the role of ancillary material and their cost is not directly attributable to the final product. So, see, this is the main difference between direct and indirect material. In direct material, the cost is directly attributable to the final product. In indirect material, the cost is not directly attributable to the final product. And indirect materials are ancillary material, supportive material. Let's take an example. Okay, I know you must be having some doubts. So, we'll have this example and then it will be crystal clear that what type of material I am talking about. Now, we'll see this example. Pay attention for indirect material. So, suppose this is a machine. Okay. So, in manufacturing organization, we use machine for the manufacture of final output. And let's say this output is our pen. Okay, in the previous example of direct material, we were manufacturing pen. Let's continue with that. So, we are manufacturing pen, that is our final output, and we use machine for that. Okay. Now, let's say this machine requires grease and also lubrication oil for the smooth flow of machine. Okay. We want our machines to be working smoothly without any interruption. So, we need grease and oil. Now, ask yourself, is this grease and oil a material? Answer is yes. Now, is this grease and material a direct material? So, direct material is something which is incorporated in the final product. And directly traceable to the final product. Now, this grease and oil, okay, this grease and oil is not incorporated on the final product pen. It is incorporated on machine. Both grease and oil are incorporated on the machine and from there we get our final product. And also the cost of grease and oil, whatever cost you are incurring, it is for the machine. Indirectly it will be later absorbed over the pen. So, the grease and oil is your indirect material. Okay. If I ask you, pay attention everyone, if I ask you, out of direct material and indirect material, what do you think that which material is important? Now, when I say the word important, importance means from the perspective of controlling. So, you must be thinking about the direct material, because see, direct material is something which is incorporated in the final product. And without direct material, without your, for example, plastic, you cannot manufacture plastic pens. Without plastic, you cannot manufacture your plastic toys. Without wood, you cannot manufacture table. Okay. So, one thing is very clear that direct material is something which is very important. So, we have to have proper control over the direct material. Okay. So, proper control is required, and the reason why do we need a proper control, number one, so that the production is not interrupted. Okay. The production is not interrupted. You don't want your production process gets interrupted because of not having the direct material, or maybe having the less quantity of direct material. So, we should have a proper records, proper controlling over our direct material. Second point, very important point, pay attention. Your direct material is a very important component of your main output. At the same time, it's a very important component of total cost also. In your total cost, in costing what we do? We calculate cost. So, in your total cost, one of the component is material, direct material, and that's very important. So, just imagine if the calculation is wrong of that direct material, what will happen? Sir, the calculation of total cost will get hampered. And if the calculation of total cost gets hampered, it will impact the selling price. Okay. So, that's why its control, its recording so important, so that your selling price is one more reason for having good control over the direct material, and that is quality of final product. See, the quality of table depends on the quality of wood you are using. The quality of plastic toys depends upon the plastic you are using. Okay. So, for having good quality of final product, you should have good quality of raw material, direct material also. Okay. Now, we'll see some examples of products. Okay. Final products, and what kind of direct material and indirect material which will be used here. Okay. I would like you guys to do is, when I write the name of product, okay, just pause the video and think of yourself that what could be the direct material, what could be the indirect. Our final product, number one, is shoes. Suppose there is a company manufacturing shoes. So, what could be the direct material for shoes? Just pause the video and think about it. Okay. So, for shoes, the direct material will be leather, and sole, the shoes sole, okay, is also a direct material. Now, what could be the indirect material? So, the indirect material could be the machine oil. Obviously, you need machines. Okay, the indirect material could be the cleaning material, the cleaning supplies. Okay, simple. Let's see another example. Second example, pay attention. Suppose you are manufacturing tires. Now, for manufacturing tire, what will be the direct labor? Sir, for tire, direct material will be rubber. Direct material will be what? Rubber. Be the indirect material. So, indirect material could be grease, okay, maybe glue, okay, stationery items, etc. Okay, this will be your indirect material. Now, let's take one more example. Example number 3. Suppose you are in a cloth manufacturing business. Okay, cloth. So, for manufacturing cloth, what would be our direct material? So, the direct material would be the fabric. Okay, so fabric is our direct material. And what would be the indirect material? So, for example, safety gears for the employees, for the laborers. In safety gears, you can write safety gloves. Okay. And again, your machine oil, cleaning supplies, okay, and greasing of machines, etc. All these are your indirect material. Okay. So, I hope with this example, now it's clear that what is direct material and what is indirect material. Now I would like you guys to please make a note of this. Please write down these 3 examples in your notebook. Okay, the product name, the direct material required and the indirect material. Also, you need to note all these things which we have written here. So for that, I'll show you the content. Okay, so this is our content. Let's quickly go through it. So meaning of material we discussed. All items used in the making of the final product is our material. 2 types of material are there, direct material and indirect material. Direct material is basically which is incorporated in the final product and its cost is directly attributable. And also it is a significant part of your final product and a significant cost component also. Okay, we discussed that earlier, that in your total cost, material cost is very significant. Okay, that's why we need proper recording and control of direct material. In case of indirect material, it's an ancillary material and its cost is not directly attributable to the end product, and the importance of proper recording and control of material. Okay, so you can make your notes from here. Thank you. Students, let's discuss another topic in the material chapter, and the topic's name is valuation of material. Okay, valuation of material. Now understand, see, so when we acquire or when we purchase our material from the supplier, okay, there is a purchase price which we need to pay to our supplier. Now under this concept of valuation of material, we will be discussing that how that purchase of material is going to be valued in the books of accounts. Okay, what is the final amount of the material which we have purchased? Now, in order to arrive at this final amount of the valuation of material, the final amount of the material which you have acquired from your supplier, okay, there are certain items which we need to deduct during this valuation process. There are certain items which we need to add or exclude, okay, during this valuation process. So we'll see one by one all these items and what these items are, okay, and how they are going to be treated in the valuation process. Now, so I will be dividing our discussion to 2 parts. Number 1, items to be deducted. Okay, so in this we will be discussing those items which we need to deduct while calculating the cost of purchase of material. And the second part of our discussion is items to be added, okay, slash excluded. So excluded here means those items, okay, which are if which are not added, then you need to exclude them from the calculation. If they are added, so go ahead and add them. Now let's see. So first we are going to see items to be deducted. Now in this, the first one is the trade discount and the second one is quantity discount. Okay, so trade discount, quantity discount, and one more, that is your grant, okay, grants, incentives and subsidies. Okay, subsidies received from the government or from any other organization. So first thing which you have to keep in your mind is that the trade discount, quantity discount and grant, incentive, subsidies, okay, you need to deduct while valuation of your inventory, while valuation of your material. Now let's see one simple example on this trade discount and quantity. This example goes like this. Suppose units purchased is equals to 10,000. Okay, 10,000 units purchased, and purchase price per unit is equals to rupees 10. Okay, now there is a trade discount. The supplier has given you trade discount, okay, at the rate of 2% on purchase price. Okay, so now we'll see how we are going to calculate this trade discount. Pay attention. So trade discount is at the rate of 2% on purchase price. So this is your purchase price. So what will be your revised purchase price after trade discount? So sir, revised purchase price after trade discount will be 10 minus 2% of 10. So 2% of 10 is 0.2. Okay, so therefore 9.8 rupees is my revised purchase price. So what will be the value of these 10,000 units after trade discount? Sir, it's very simple. 10,000 into 9.8, that is 98,000. Suppose you need to calculate this trade discount on the total purchase value, not price. So pay attention. Now we'll calculate the total purchase value, trade discount on total purchase value. So what is your purchase value before trade discount? Sir, the purchase value before trade discount was 10,000 into 10. Okay, 10,000 into 10. So that is 1 lakh rupees. And how much is your trade discount? 2%. So less trade discount at the rate of 2% on this value. So 1 lakh's 2% will be 2,000 rupees. Therefore, your value after trade discount is 98,000 only. So you can see we are getting the same value. So if you apply trade discount on purchase price or if in the value, you will be getting the same answer. Now remember one very important thing about trade discount. We don't record trade discount in our books of accounts. Buyer doesn't record. So when you buy goods, okay, when you buy goods, you will be recording them at 98,000 only. Okay, so don't record 1 lakh, then minus 2,000 is equals to 98. No, directly 98,000. So this was the example of your trade discount. Now let's see quantity discount. Okay. So what happens in case of quantity discount? It's very simple. Quantity discount is given on the number of quantity you order to your supplier. So suppose 10,000 units you generally order. Okay, and price per unit is rupees 10. So value is coming 1 lakh rupees. Now let's say your supplier said, listen, if you buy more than 15,000 units at one go, I will give you a discount of rupees 1 on this price. Okay, so now let's say you order 20,000 units. So you will get that discount. So your revised price will be now 10 minus 1, that is rupees 9. So the value is 20,000 into 9. 1,80,000 rupees. So this 1 rupees, the discount given by your supplier, depends on the quantity, how much quantity you are ordering. If you order 10,000 units or 9,000 units, you won't get any discount. So this is known as your quantity discount. Your total discount, your total quantity discount, Q means quantity, discount is equals to, see, 20,000 units and 1 rupees per unit. So total discount is 20,000 rupees. Okay. Let's go back to our discussion. So we discussed items to be deducted. In that we saw trade, quantity discount. Now grant, incentive and subsidy. It's very simple. If you are receiving any grant money, see, what do you mean by this grant, incentive, subsidies? They are generally assistance. Okay, they are generally assistance or help from the government or maybe any other organization to you. Now here, this help, this assistance is in the form of money. Okay, so if you have purchased some inventory, let's say you have purchased inventory worth 10,000 rupees and government said, okay, listen, I am going to give you some grant towards this purchase, maybe some incentive or subsidy of rupees, let's say 1,000. So how much is your cost? 9,000. So see what we just did, we reduced this 1,000 while calculating our cost of purchase. So please reduce any grant, any incentive, any subsidy received from the government or any other source. Now we will shift our focus on the items to be added / excluded. Now I want everyone's 100% attention. The items to be added. So that means now we are going to discuss those items, those expenditures which we need to add while calculating the cost of purchase. Then we will discuss those items, okay, which might not be added. Then we have to exclude them and we will discuss the logic behind it. Okay. So the first item which we need to add is insurance charges. Okay. So if you are paying any insurance charge, any insurance expense, okay, towards the purchase of your material, okay, for example, the transit insurance, when you buy goods, your material, you insure them, okay, so that insurance charges will be added, okay, will be added to your cost. Second thing which we need to add is the freight inward. Freight inward. So freight inward basically means your transportation charges when you purchase material. So that freight inward on the purchase of material inventory you have to add. Third thing which we need to add is any commission, okay, or any brokerage if you are paying to any agent or to any broker towards the purchase of raw material, go ahead and add it. Next thing which we need to add is basic custom duty, okay. So basic custom duty. So when do we pay this basic custom duty? Sir, it's very simple. When we purchase raw material outside the country, that means from abroad, then you pay basic custom duty. Go ahead and add ticket that custom duty in your inventory valuation. It has to be added. Okay. Next thing which we need to add is road tax or toll tax. Okay. If you are paying any road tax or toll tax towards purchase of your material, then it has to be added to the cost of purchase. Okay. Now understand the next 2 points very carefully. Next point is your GST, that is goods and service tax. Okay. So we have here integrated goods and service tax. Okay. Integrated goods and service tax. Then we have SGST, that is state goods and service tax. Then we have CGST, central goods and service tax. Now I have used short form for SGST and CGST, but in the main exam, please, you have to use the full forms only, no short forms. Okay. Now let's understand the treatment of this GST. Okay. Pay attention. A simple example again to understand the concept. Now suppose you are a registered person under GST Act. One thing. So if you are a registered person under GST Act and you are paying GST to your supplier on the purchase of material, okay, what will happen? Sir, we will get credit. We will get credit of this GST which we have paid on our purchase. So if you are getting the credit of the GST which you have paid, then that means there is no cost from your side. See, there was cost, you paid GST. But later on, since you are a registered dealer, you are going to get the credit of that GST paid. Okay. So now you have got the credit of that GST paid. Okay. Do not add this to your cost. Why? Because you have already got there is no actual outflow of cash. There is no actual cost from your side. You have got the credit. Now, suppose you are not a registered, but you are an unregistered person under GST. So, if you are an unregistered person under GST, are you going to get the credit of GST you have paid on your raw material? Illogical. Obviously, no. You will not be getting any credit. You are an unregistered person. How you can get the credit of GST paid? So, no credit. And if there is no credit, that means it is your cost now. So, please go ahead and add it to your cost of purchase. Okay. So, simple thing which you have to remember, if you are a registered person and if you are getting credit, do not add. If you are unregistered person and there is no credit, go ahead and add. Okay. So, let's get back to our discussion. In items to be added / excluded, okay, GST will be added if you are an unregistered person and there is no credit. If you are a registered person and you are getting the credit, then please exclude it from your calculation. Do not add it. Okay. Next point we will discuss, a very interesting point, is cost of containers. Now, what is these containers we are talking about? So, see, generally what happens when we buy raw material, let's say for example, you are purchasing a chemical as your raw material, okay? Now, this chemical cannot be transferred in a truck, in a lorry, in an open way. You cannot transfer it openly. You have to cover it properly. So, for that, supplier gave you containers. Now, the cost of those containers you have paid, okay? As a buyer, you have paid the cost of those containers. Question is, whatever cost we have paid for those containers, do we have to add it to our cost of purchase? Yes or no? Okay. So, let's discuss this cost of containers point, okay? A very interesting point, cost of containers. Now, see, one thing, just keep in mind that you have paid some amount for these containers. Let's take an example. Suppose you have paid rupees 1000, okay, for the containers, okay? Now, understand, two things can happen. Number one, the containers are not returnable. The containers are what? Sir, not returnable. We are not going to return these containers to our supplier. And we have paid 1000 rupees for the container. So, a simple question, ask yourself, is this your cost? Yes or no? Yes, sir, this is our cost. We have paid the amount and we are not returning the container. So, obviously, we are not going to get this amount back, refund to us. No? Okay. So, if it's a not returnable, then the entire 1000 rupees which you have paid is your cost. Please go ahead and add it to the cost of purchase. Okay. Second case is these containers are returnable containers. These containers are what? Returnable containers. Okay. You can return these containers. Now, please pay attention on this. If these are returnable containers, two things can happen. Number one, you are getting full refund. So, full refund of what? Of this 1000 which you have paid. Pay attention. So, you have paid 1000 rupees and now after returning the containers, you got refund of rupees 1000. Tell me, is there any cost which you are paying exactly? No, sir. We paid 1000, but we got back 1000 again. So, are we going to add this? No. So, do not add. Okay, simple. Now, suppose in case of returnable, there is partial refund. Not full refund, but partial refund. Sir, partial refund means you had paid 1000 rupees earlier for the cost of containers. However, there was some damage to the containers. So, seller gave you refund only rupees 600. Now, think about and ask yourself, if you have paid 1000 and you are getting only 600 rupees as a refund back, how much is exactly your cost? So, you will get this answer. Sir, the cost is rupees 400. So, what do you think? We should add 400? Yes, this 400 will be added to our cost of purchase. Okay. So, this is your cost of containers. Okay. Now, let's get back to our this. Okay. So, these are your items which are to be added / excluded. Now, we are going to discuss 2-3 points. Pay attention. Number one is your damage charges. Okay. Damage charges. Now, what do you mean by this term damage charges? Pay attention. Damage charges are paid by the buyer, okay, to the transporter when the goods are not uploaded or offloaded from the vehicle, okay, within the given time limit. Okay, suppose your transporter who brought the material for you and everything is done, your transporter is standing and waiting for you, and now you took like 2 or 3 days or maybe more than that. Okay, so your transporter will charge something from you. That is known as your damage charges. Okay, so damage charges are payable when there is delay, okay, in uploading / offloading of material or inventory. Okay, so the next charges are detention charges. Pay attention. Detention charges. Okay, so detention charges are payable by the buyer if the containers are taken outside of the premises of port, okay, after the free time. Okay, so suppose we have acquired some material through ship and the goods, the inventory are in there in the containers. If you take those containers outside of the premises after the free time which was there, then you have to pay some detention charges. Okay, so detention charges are payable when containers are taken outside the premises, okay, after free time. Now next expense, okay, is penalty. Penalty or any fines payable by you due to any infraction of law, due to breaking of any law. For example, suppose you are transporting goods, okay, and in order to transport goods in a truck or any other vehicle, you should have a invoice or pro forma invoice with you, and suppose that invoice is lacking, so there is no document evidence with respect to the goods you are transferring, okay, then you have to pay some penalty or maybe fine to the authorities. Now the main point, important point here is this damage charges, this detention charges, and this penalty fine. Just think and ask yourself, are we paying this damage, detention and penalty fines because we have purchased raw material? Are we paying these amounts due to the reason that we have purchased? No. You are paying damage because there is delay. You are paying detention because you are taking the containers outside the premises. You are paying penalty and fines because there is some breaking of law. Okay, there is some breaking of law. So reason is not purchase, reason is different. So any cost which you are incurring due to these charges, damage, detention and penalty, will be treated as abnormal cost. And since it's an abnormal cost, you cannot add it to the cost of purchase. So do not add. Then what we should do with it, sir? We will be charging it to our costing, profit and loss account. This is the correct treatment. Okay. Now I would like you guys to please make a note of whatever we have written under this discussion of valuation of your material. Okay, so you can write it down from this slide. Okay, valuation of material, pay attention. So items to be deducted. Okay, sir, items to be deducted. We saw trade discount, quantity discount and subsidy, grant or incentives. Okay, in items to be added / excluded, we saw insurance charges added, commission or brokerage paid added, freight inward paid added. Now pay attention on one point. Insurance charges should be with respect to the raw material you have purchased. Commission or brokerage paid should be to the agent or broker who has acquired raw material for you or has helped you in acquiring the raw material. Freight inward should be with respect to raw material you have purchased. Now, in case of cost of containers, which is very important point, we discussed what is to be added, what not to be added. Okay, basic custom duty you have to add, road tax, toll tax you have to add if both these two are related with the purchase of raw material. In case of GST, we saw that GST will be added if there is no credit available and you have to exclude it from your calculation. That means you don't have to add if credit is available. Now some more points to discuss. I would like you guys to have 100% attention here. Cash discount. You must have heard about this word, cash discount. Yes sir, cash discount. Now when do we get cash discount? I'm a buyer. I buy raw material from my supplier. So when do I get the cash discount? Sir, when you will make payment to your supplier. Correct? Now, is supplier going to give me the cash discount every time I'm going to make the payment? No sir, you will get the discount only when you make the payment within the specified time. Suppose supplier said within 30 days, I will give you discount. If you make payment within 30 days, I will give you some discount. So if I make payment within those 30 days, let's say I made payment on 20th day, I will get discount. So cash discount has connection with what? Purchase or with the payment? Sir, payment. Cash discount is related with the payment you are making. Na? If you made payment late, there is no cash discount. If you made payment earlier, there is cash discount. So cash discount has direct connection with the payment, not with the purchase. That's why cash discount is not deducted while calculating your purchase price, while calculating your cost of purchase, which we saw earlier. Okay, it is treated as interest and finance charge. It will go to your costing, profit and loss account. Okay, do not write short form in exam, you have to write full. Now GST should not form part of cost of purchase unless mentioned specifically. Okay, so GST will not be added to your cost of purchase. Okay, if it's mentioned in the question that GST is making, shall make form part of your cost of purchase, then go ahead and add it. Now detention charges, penalties, damage are abnormal nature of cost and therefore they are charged to costing, profit or loss account. Now cost of containers to be added only to the extent of refund not given. So to the extent of refund you are not getting, go ahead and add the cost of containers. So how you are going to calculate that amount? Sir, cost paid for containers, remember 1000 rupees. How much refund you got from your supplier? 600. Okay, I'll show you this one. Okay, so we paid 1000, we got a refund of how much? 600. So what is my net cost? Sir, my net cost is coming 400, which we need to add. Okay, so that was about cost of containers. Okay, so this, everything which is written on this screen, okay, you have to write this. You have to make a note of all these points. Hello students, now we will see one simple problem on valuation of material. Okay, valuation of materials is the concept which we discussed earlier. Let's see a simple problem on this. So first of all, let's go through the requirement of the question. So requirement is very simple. Calculate the total cost, okay, and cost per kilogram. Okay, so you have two requirements here. Number one, total cost calculation. Number two, cost per kilogram calculation. Now please pay attention. When you calculate the total cost, we discussed that earlier, that in the calculation of total cost of material, there are certain items which we need to deduct. There are certain items which we need to add or exclude. So after deducting or after adding and excluding the items, okay, we will get the total cost. Okay, once we get our total cost, we will focus on the calculation of cost per kilogram, which will be calculated in this way. Your total cost, okay, divided by your total number of kilograms. Okay, simple. Now let's go through the information given in the question. So we have material purchase of 1000 kilogram and purchase price is rupees 10 per kilogram. Now after this we have trade discount at the rate of 10% on our purchase price, and from our earlier discussion we remember that trade discount is to be deducted. So we need to deduct this 10% on purchase price. So therefore what will be my revised purchase price, okay, after trade discount? Sir, it will be rupees 10 minus 10% of 10. So this will give me rupees 9. Okay, this is my revised purchase price after trade discount. Okay, then we have freight inward. So what we do in case of freight inward? So freight inward is an expense related with the purchase of material. So we have to add this freight inward. Okay, so we need to add this. Then we have GST, a very important point. GST is rupees 300 and in bracket it's given that credit is available. So you can get credit of this 300 rupees of GST. And we know that when credit is available for the GST, we have to exclude it from our calculation of total cost of purchase. So this we have to exclude. Okay. So with this information, now let's calculate. Let's solve this problem. Pay attention. Okay. So total cost is equals to your purchase value after trade discount, okay, after trade discount plus freight inward. Sir, why we are not adding GST? Because for GST credit is available, so we have to exclude it. So now let's calculate, let's find out our purchase value. So how to calculate the purchase value? Sir, number of units 1000 multiplied by the price after trade discount. See, what is my price after trade discount? 9. and units are 1000 kilograms. Okay, so what I'll do here, 1000 into rupees 9, this will give me 9000 rupees as my purchase value plus freight inward. How much is freight inward? So freight inward is 200. Okay, so just add 200 here. So therefore, what is your total cost is coming? Sir, rupees 9200. This is your total cost. Simple. Now another requirement of this question is calculate cost per kilogram, which is total cost upon number of kgs we have. So let's calculate this now. Cost per kilogram is equals to total cost divided by total kilograms or number of kilograms. Okay, I am using shortcut here, but in exam you have to write the full form. Okay, so total cost is 9200 divided by my total kgs, which is 1000 kilograms. Therefore, rupees 9.2 per kg. Okay, this is per kg. This is my cost per kilogram. Okay, so simple. This is how we calculate total cost and cost per unit or per kilogram. Okay. Okay, so this question you have to write on your notebook and then you have to write the answer also. Hello students, so let's start with our another topic. Name is shortage. Now shortage is a very small topic which we will be discussing now, but the concept of this shortage, the cost accounting treatment of this shortage is really very important for you guys to understand. Okay, so we will be going very slow while discussing this concept and its treatment, and what I would like from all of you is to give your 100% attention. Okay, and as far as notes are considered, so please first understand the concept, and once you understood that, you can pause the video and you can make the notes also. Okay, I hope this is clear. Okay, so what is this shortage means? Let me write it down. Shortage means the difference between input and good input. Okay, so difference between input and the good input is known as shortage. Now, what happens generally? Suppose, let me give you a simple example. Suppose you bought 1000 units of a particular material, but when that material reached to you, okay, it's only 950 units. Okay, so you bought 1000 units of a particular material. However, what you got only 950 units. Okay, so can I say that there is a 50 units of shortage? Yes sir, we can say that the 50 units are shortage. Now this 50 units of shortage, what could be the reason behind it? Why there is a 50 units of shortage? So now we will see. The shortage can happen because of two reasons. Number one, because of normal reasons, and number two, because of abnormal reasons. Now if you have a shortage because of normal reason, okay, so whatever loss you have because of that is known as normal loss. Okay, and if you have shortage because of any abnormal reason, then whatever loss you have because of that is known as abnormal loss. Now let's see one by one that what is normal loss and what is abnormal loss. Pay attention. So normal loss is a loss which is unavoidable. Okay, normal loss is a loss which is unavoidable loss. Now think about it. What kind of loss, okay, is generally we cannot avoid? So first thing, sir, for example, evaporation. Suppose we are purchasing petrol and let's say 1000 liter of petrol. Do you think that you will be getting exactly 1000 liter of petrol after transportation and all activities? No, there will be some shortage. So that some shortage is because of evaporation. Now can you avoid this completely? No sir, we cannot avoid it completely. There will be some evaporation. So any loss which is unavoidable, okay, which you cannot avoid at all, that is known as your normal loss. So for example, evaporation, for example, your normal leakages, etc. Now let's come to abnormal loss. So sir, if normal loss is unavoidable, that means abnormal loss is something, okay, which are avoidable. So these are those losses which we can avoid. Now think about it. What could be the losses which we can avoid? So for example, loss by theft. Loss by theft, if you have proper security over your material, okay, if you have proper controls over your material, then this loss could have been avoided. So loss by theft, loss by pilferage, okay, loss by any accident, these are some losses which are avoidable. So any loss because of these things, these activities, is known as your abnormal loss. Now we'll see the accounting treatment, which is very important. So please pay your 200% attention. How we are going to treat this normal loss, sir? It's very easy. The cost of normal loss, okay. So whatever cost you have incurred on those units which are normally lost, okay, the cost of normal loss is absorbed by your good input. And what is good input here? Try to understand. Good input means your input minus normal loss units, okay. So from your input, if you deduct your normal loss unit, you will get your good input, and on those good input, your cost of normal loss will be absorbed. Now in case of abnormal loss, pay attention. The cost of abnormal loss, first of all, is not absorbed by your units. You cannot add the cost of abnormal loss over your good inputs. You cannot charge it from your customer. Understand, if you add this to your good units, okay, your good input, that means you are basically increasing your cost. That means ultimately you are charging from the customer. That is not allowed because this was the avoidable loss. So this is your mistake. So what is the accounting treatment? The cost of abnormal loss is charged to costing profit or loss account, okay, costing profit or loss account. So this is the accounting treatment of abnormal loss. Now this is just the theory which we just saw. Now let's take one simple example, and if you have any doubt, that doubt will be clear with that example, okay. Pay attention. Example. So for example, let's say at this point you purchased 1000 kilogram of fruits, and at this point you received only 950 kilogram of fruits, okay. So 1000 kilogram of fruits you purchased, however you got how much? Only 950 kilogram of fruits. So basically during the transportation of fruits, okay, there is 50 kilogram of shortage, and let's say that this 50 kilogram of shortage is because of some normal reason. This was unavoidable. You were already expecting that yes, there is going to be 50 kg of loss, okay. So this is my normal loss, okay. Okay. Now pay attention. So now let's put some numbers. This 1000 kg of fruit which you purchase, let's say the cost of this is equals to 10,000 rupees. Okay, so 1000 kg's total cost is 10,000 rupees. What is your input after transportation? Only 950 kg, and there is a 50 kg of normal loss. Now let's go back to the discussion and see how this normal loss, okay, gets treated in the cost accounting. So it's written here that the cost of normal loss, okay, is absorbed by your good input, and the formula for good input is input minus normal loss. Now let's see how we are going to absorb this. So what is your total cost which you have incurred? 10,000 divided by what is your good input? Sir, good input means input minus normal loss, that is 50, is equals to 950. So now this 10,000 rupees of cost will be absorbed by only good units. So what is your cost coming? Rupees 10.52. So this is your cost. 10.52 rupees is your cost after normal loss. But sir, there is one confusion. You said that the cost of normal loss gets absorbed by good input. Now try to think here. If the cost of normal loss is absorbed by good input, so the cost per unit of good units will definitely increase. Why? Because see, in the denominator here, okay, your denominator has reduced from 1000 to 950. So definitely on less units, same cost is coming. So it will increase. And how to cross check this? Pay attention. Before normal loss, what was your total cost? Sir, same 10,000. And how many units, how many kilogram of fruits were there? 1000. So what was your cost earlier? Rupees 10 per kilogram. After normal loss, what is your revised cost per kilogram? 10.52 per kilogram. Okay, 10.52 per kilogram. See, there is increase in your cost per unit by 0.52 kilogram, and this increase is because of the reason. What reason? That the cost of normal loss is absorbed by only good inputs. Okay, this is how we calculate our normal, this is how we absorb the normal loss over good inputs. Okay, so one thing here you can write it down and you can remember also that after this absorption of normal loss over good input, okay, the cost per unit. Okay, now what is the accounting treatment of abnormal loss? So it's very simple. Remember, whenever there is any abnormal loss, just remember one thing, take it to the costing profit and loss account. Okay, so let's see, suppose in the same example, okay, in the same example, there is abnormal loss of 20 kilogram of, now what is the cost of these 20 kilograms? So the cost of 1 kilogram was how much? 10 kg. So the cost of these 20 kilograms will be rupees 200. What we are going to do with this cost? Just take it to the costing profit or loss account. This is the accounting treatment of abnormal loss. Okay, so I hope the concept of normal loss, abnormal loss is clear along with the example which we just discussed. Now what I would like you guys to do is please make a note of this normal abnormal loss and please also note this example. Okay, thank you. Hello students. So now let's solve this other problem, and this problem is based on valuation of material but after normal loss. Okay, so as you can see, this problem is an extension of problem which we have already solved in case of valuation of material, a simple problem which we solved earlier. Okay, so let's focus on requirement first. So as you can see, the requirement is exactly same. Calculate the total cost, okay, and calculate the cost per unit. So how do we calculate total cost is exactly the same which we did in that question. Okay, so our total cost was coming rupees 9,200. Okay, after getting the trade discount of 10% on purchase price and then adding the freight inward and ignoring the GST because credit was available. Now here the cost per unit. Okay, so before we see that how to calculate this cost per unit, let's focus on just one thing. This additional information which has been added in this question. During the transportation of material, there is normal loss of 50 kilograms. We have a normal loss of 50 kilograms. Now, how do we calculate cost per unit if there is a normal loss. So the formula is very simple. Total cost, okay, divided by our good units. And what is good units? Sir, good units means the input minus normal loss units. Okay. Now, so let's calculate. So total cost we already, the only thing left is the calculation of cost per unit. Okay. So total cost is equals to 9,200 rupees and my cost per unit is equals to my total cost, which is 9,200 divided by good units. And how many good units we have? Sir, we have input. How much was our input? Let's see, 1000 kgs. And my normal loss is, let's see again, it's 50 kilograms. Okay. So 1000 minus 50. This is my good units. That is 950. So let's calculate now cost per unit. So 9,200 divided by 950. So now my cost is coming rupees 9.68 per kilogram. So this is your cost per unit after considering the normal loss. Okay. So please write down this problem again. Okay, with this additional information, and then you need to calculate the cost per unit or cost per kilogram. Okay. Hello students, let's discuss our another topic in your material chapter. The name of the topic is inventory control. Now please understand, inventory control is made up of two words. As you can see, one is inventory, and we know the meaning of inventory now. Inventory is generally our material. Okay. And the second word, which is more important here, that is control. Now what do you mean by the word control? Sir, control means to keep something within certain limits. Okay. This is the general meaning of the word control, to keep something within certain limits. Now let's read these two words together. Inventory control. So in this topic, what we are going to learn is how we are going to keep our inventory within certain limits. But sir, there is one question here. Why do we want to keep our inventory within certain limits? Okay, why do we want to keep our inventory within a certain limit? So to answer this question, pay attention. So that we have sufficient stock. Okay, so that we have sufficient stock level at all the time. Now try to think, if you don't have sufficient stock level all the time, what will happen? Production will get interrupted. Okay, so if I am not having sufficient stock level, then my production will get interrupted. Okay, and no manufacturing organization wants their production to get interrupted. Why, sir? Why they don't want this? Because if the production gets interrupted because of not having the sufficient stock level, then they will not be able to fulfill the demand. One thing. Second thing, if they are not able to fulfill the demand, okay, their goodwill, their reputation is going to be impacted in the market. So, simple thing, we should have sufficient stock level at all the times. How we are going to have this sufficient stock level all the times? By this inventory control. Now, there's one more reason why do we want this inventory control, and that is nobody wants unnecessary stock. Okay, unnecessary stock. Now, what do you mean by unnecessary stock? Sir, unnecessary stock means the stock more than the required. If you have more stock than you need on a per day basis, what will happen? Sir, if we have more stock, okay, more than we require on per day basis, then we might need to incur unnecessary cost also. Okay, because the inventory is not free. If you're buying inventory and you are having unnecessary stock with you, what will happen? Okay, You bought inventory, you incurred some cost, and now you are holding inventory in your godown, in your factory, wherever. Okay, then you have to incur some cost for holding that inventory. Okay, so unnecessary cost is being incurred if you have unnecessary stock. So we want here is sufficient stock level and no unnecessary stock. That is, we want a balance, we want some balance between sufficiency and between unnecessary stock level. So to have this, we have the concept of inventory control. This control topic will tell you how to keep sufficient stock level and how not to keep unnecessary stock level. Let's try to understand this inventory control concept with a simple example. Okay, suppose you have 100 units of inventory with you on a particular day, and the demand of inventory is, let's say, 150 units. Now, what do you think? What is the situation here? Do you have sufficient stock to fulfill the demand? Answer is no. No, sir, we don't have sufficient stock. Okay. Now, this not having sufficient stock will cause the problem of production interruption. Okay. Simple. And we don't want that. Another example, pay attention. Suppose you have 100 units of inventory with you on a particular day, and the demand, okay, is 50 units. Now, do we have sufficient stock here to fulfill the demand? Yes, sir, we have sufficient stock. We have 50 units more with us on a particular day. But don't you think that if you need only 50 units, why would you have almost, I mean not almost, exactly double your requirement? It's very, very huge. Now, because of this, what will happen? You will have unnecessary cost on this extra 50 units, which you don't want. So basically, we want to have the number of units sufficient to fulfill the demand and at the same time not to be unnecessarily holded. Okay, so in order to do that, what we have the concept of inventory control. So this concept will help us in making our inventory, okay, at a proper levels at all the times. Now we have 4 different methods under this, okay, which will help us to make us understand that how you can make your inventory at a perfect level at all the times. There are 4 different ways, okay, by which we can control the level of inventory in our organization. Number 1, and very, very important, is quantitative levels, by setting different quantity levels. Now, what we are going to learn under this different quantity level, pay attention, we are going to learn reorder level. That is when we should be ordering our material. Okay. Second thing we are going to learn is reorder quantity. Okay, how much quantity we should be ordering, and in this reorder quantity we will understand one very, very, very important topic, and that is economic order quantity. Short form is EOQ. Okay, and the third thing is what should be my maximum stock level. Okay, after this we will see what is your minimum stock level. Okay, and after minimum stock level we will learn about average stock level. How much should be the average stock we have in our organization. Okay, and after average stock level we will learn about the danger level. The danger level is the level at which we issue the material only for the emergency requirements. And then the last we have buffer stock that we keep to fulfill the sudden demand. So once we complete the quantitative levels, once we complete all these stock levels, how to calculate them, their basic concepts, then we will see relative classification. Now in the second one, by relative classification. So basically in this, what we are going to do, we are going to classify our inventory. on the different bases. So under this, the first thing we are going to learn a very important ABC analysis. Okay, ABC analysis. So under ABC analysis, we are going to classify our inventory based on their values. Okay, after ABC analysis, classify our inventory on the basis of fast, slow and non-moving inventory. Okay, so here we are going to classify the inventory on the basis of whether it's fast, whether it's slow, whether it's non-moving. And after they're going to classify the inventory on the basis of its importance. So whether it's very vital, and whether it's vital, whether it's essential, and whether it's desirable. So on the basis of the importance of inventory, we are going to classify it. After this, we are going to classify the inventory on the basis of their price. So the price could be high, the price could be medium, and the price could be low. So on the basis of that, we will classify the inventory. So far we saw two. Number one, on the basis of the levels of stock. Number two, on the basis of the classification of stock. After that, we'll see using ratios. So on the basis of ratios also, you can apply some control measures. So under this, we'll see two topics. Number one, we'll see one ratio of input-output ratio. So what is my actual input and what is my standard input? On the basis of that, we will classify the inventory. And then we'll see a very famous topic, inventory turnover. So in how much time my inventory gets turned over, my inventory got sold, converted into finished output, that we'll see in inventory turnover. And once that is finished, okay, we will come to the physical control. So how we are going to control the movement of inventory physically. So under this, we will learn the first topic, which is two-bin system. Okay, after two-bin system, we will see establishment, okay, EST, establishment of system of budget. So how budgets, how can we use budget as one of the measure of physically controlling the inventory? And once that is over, we'll see a topic named as continuous stock taking. Okay, and once that is complete, last, that is perpetual stock taking. Okay, so these which you are seeing right now in front of you, these are the different techniques of controlling the inventory in the organization. Now you can see they are not just one, there are so many techniques, whether it is based on levels, whether it's based on classification, okay, classification on the basis of ratio and physical control. All these are different methods to have good inventory control. Okay, now I want you guys to please write it down on your notebook. Okay, this is just a summary of what we are going to encounter in the next topics. So you can make notes from this slide. Students, now we'll see reorder level. Okay, so reorder level is very important concept under the inventory control, and under that we had quantitative levels we discussed. Okay, and under quantitative level, the first level of inventory is reorder level. Now understand this reorder level. What is this, sir? So reorder level means when to order. Okay, reorder level means when to order the raw material to our supplier. This is the point at which you order your raw material to your supplier. Okay, now there is a way to calculate this, and that's a very simple way, and that's your formula. If there is a formula available, simply put the formula and you can calculate the reorder level. But here, first we are going to discuss the logic, the concept behind that formula. Okay, then I will show you the formula also. Okay, so now let's discuss what is this reorder level exactly. So for example, this is your warehouse. Okay, this is your warehouse, or you can call it godown also. Now in this warehouse, okay, you have the inventory stored. Okay, this is your inventory which is stored in this warehouse. Now your boss asked you pay attention, your boss asked you, tell us at what level, okay, at what level should we order the inventory, that's your material, to your supplier. Should we order at this level? Okay, that is the highest level, the maximum level. Should we order at this level? Or should we order at this or this level? Now, if I ask you guys that should we order the material at this level, so you will say, sir, no, this is not good level. Why? Because sir, if we order at this level, the material will take some time to reach to our godown. Okay, the material will take some time to reach to our godown. Okay, now during that time, obviously we will be consuming the material, we will be using the material available, this one. What if material hasn't reached to us yet and this is over? Your stock of material is over. This will cause the problem of what? So non-production, which we don't want. So should we order at this level? Should we order at this level? So basically the question here is, what is the right level? What is the correct level at which you should order the raw material to your supply so that you doesn't face this problem of non-production? You should have sufficient quantity of raw material with you while you have already placed the order with your supplier. Okay. Now, pay attention. How to calculate this? Suppose the minimum consumption, okay, the minimum consumption of material in a day is equals to 100 units. Okay, so in a day, in one day, you consume 100 units per day, and the maximum consumption of units, maximum consumption of material in a day is, let's say, 200 units. Okay, now there is one more thing. When you place order with your supplier, okay, so let's say your supplier is in a different state, okay, and generally it takes them some time to deliver material to you. Now that time which supplier takes to deliver material to you is known as reorder period. Okay, it is known as reorder period, or you can also call it lead time. Okay, now the minimum reorder period means, sir, minimum reorder period means the minimum time the supplier will take to deliver the material to us. Let's say that is 10 days. Okay, and the maximum reorder period, that is the maximum time the supplier will take to deliver raw material to you, is, let's say, 20 days. So now we know few things. We have certain information with us. Pay attention on that. We know that on daily basis, minimum we consume 100 units and maximum we consume 200 units. Okay, and the minimum reorder period, the minimum days which supplier take to deliver the raw material at our godown, our warehouse, is 10 days, and maximum they take 20 days. Now this is what we know so far. Now what we want to calculate here, that at what level should we place the order to our supplier. Now pay attention. If I'm placing order of material at this level, then I should have sufficient material with me, okay, during the lead time, because supplier will take their time to deliver the material. So during that time, I should have material in my godown to fulfill the production requirement. Question is, at what level you should order the material again. Now listen very, very carefully. What I will say now, pay attention, that in a single day, how much maximum consumption of raw material we have? Sir, 200 units. So in a single day, maximum we can consume 200 units. In any worst case scenario, 200 units is my maximum consumption in a day. And in a worst case scenario, what is the maximum reorder period, which is also known as lead time, that supplier will take? 20 days. So 200 units per day. Okay, this is my maximum consumption, and 20 days is my maximum reorder period. Question here is, at what level should I order my inventory? So suppose I'm placing the order at this level. Okay, and now I want to know how much should be the level where I'm placing the order. So what I will do, I will see, okay, that maximum I consume 200 units each day. Okay, maximum I consume 200 units each day. And my supplier in the worst case scenario is going to take 20 days. So if for the next 20 days I am consuming 200 units, so 200 units in the next 20 days, that means I should have 4,000 units in my stock when I am placing the order. So this should be 4,000 units. So if I am placing order at 4,000 units level, pay attention, if I am placing order at 4,000 units level, then if every day I am consuming 200 units, that is my maximum consumption, remember. And for the next 20 days, even if I have not received the order from my supplier, that is the maximum reorder period, still I have 4,000 units with me. That means for the next 20 days, which is the maximum reorder period, if I consume 200 units, which is the maximum consumption, I am still on a safer side. So my reorder level is 4,000 units. Now let's see the formula. I hope you can derive the formula on your own now. It's very simple. So reorder level is equals to maximum consumption, okay, multiplied by maximum reorder. Okay, simple. So now you know the formula which you can use in the exam directly. Okay, if you have the information about maximum consumption and maximum reorder period, and the good point, you know the logic also, that how we derived, how we came up to this formula. Okay. Hello students, let's start with the another topic in the chapter material. Okay. So earlier we had discussed what is this inventory control, and under inventory control we also discussed the reorder level. Now let's continue and move forward. Now after reorder level, our next concept is reorder quantity. Now reorder quantity is a highly important topic from your examination perspective. So I would like all of you, so please pay full attention when you are watching this video. Okay, we will be going very slow and discussing this concept. So reorder quantity. Okay, now suppose, for example, this is your warehouse. Okay, this is your warehouse, or you can call it as your storeroom also. I am writing here warehouse. Now in this warehouse we store our material. Okay, and let's say this is one of the level of material in the warehouse, and we have here 4,000 units. Now this 4,000 units level is my reorder level. Okay, in the previous discussion when we discussed reorder level, we calculated it as 4,000 units only. So I'm continuing that only. So 4,000 units is my reorder level. This is crystal clear to us, and how to calculate this we already know. Now at this reorder level, at this 4,000 units of level, okay, I need to place the order of quantity to my supplier. See, this is my reorder level, not reorder quantity. At this level, okay, in my warehouse, I will be placing order to the supplier of some quantity. That quantity is known as reorder quantity. Okay. So now we know that what is reorder quantity. Okay. So at 4,000 units level, which is my reorder level, I will be placing some number of units order to my supplier. That is known as my reorder quantity. Or you can say that this reorder quantity basically means how much to order. Okay, how much quantity we should be ordering at this reorder level. Now, while fixing the reorder quantity, now sir, why do we need to fix reorder quantity? Because see, whatever quantity you are going to order, so many things depends on that. Okay, for example, at which level you are placing the order, that is your reorder level, that depends on your reorder quantity. Then your minimum level, your safety level, your danger level, there are different levels of stock which depends that how much quantity you are going to order. Okay, so there are certain points which we need to give considerations while ordering the quantity. Now, out of all these considerations which we give, there is one consideration which is highly important, not just from the learning perspective, also from the perspective of your examination, also from the perspective of this chapter. In this chapter of material, the one and very important thing is the material cost. We haven't discussed much about the cost yet, but now we will be starting it, the discussion on the material cost. So whenever you are giving the ordering quantity, whenever you are placing an order for your reorder quantity, apart from the other consideration, one very important consideration which you have to give is to the cost. What is the cost of this reorder quantity? Can I order any quantity I want at this level? Can I order any quantity I want? No, sir. We cannot order any quantity we want. We have to consider that what is going to be the cost of this quantity which I am ordering. So we will be ordering that quantity where my cost is minimum. Where my cost is minimum. Now, before we move to this concept of reorder quantity, that what is exactly is reorder quantity, first we need to learn what is this cost, because if you don't know what is this cost and we directly jump to this reorder quantity, then you will get confused definitely. So first we will see what is this cost we are talking about, then we will see where this cost is minimum, and where this cost is minimum, that is your reorder quantity. Okay, so please make this diagram, whatever written in your screen, on your notebook. It will help you while revising the concepts. Okay. Hello students. Now we will see what is this concept of total cost of material. What all items are included in the calculation of total cost of material. So one thing which I want to highlight here, that calculation of total cost of material is a very, very important point from your examination perspective. So I want all of you to have your 100% attention here. You should be very good, okay, very quick in the calculation of total cost. So we will be covering this topic, okay, step by step, okay, so that you have good idea about the concept and good idea about how to make the calculation. Okay, so our topic's name is total cost. Okay, now understand, generally if I ask any student who has not studied the cost accounting yet, okay, cost accounting is a very new subject for all of you, I know. So if I ask generally any student that what is the cost of your material, okay, so out of 10 students I am assuming that more than 50% or maybe more than 70% students will say, so the total cost of material purchased is its purchase price. Okay, but that is okay in case of financial accounting, but in cost accounting that's not the case. So first thing which you all have to do here is forget this misconception about total cost of material. Okay, total cost of material does not include only purchase price. It does include purchase price, yes, but there are some other costs also involved. So forget about this misconception, okay, that total cost includes only purchase price. Now we'll see that what this total cost actually includes. Okay, pay attention. So when you calculate the total cost of material which you have purchased from your supplier, the first thing is obviously the purchase value. Okay, the first thing is obviously the purchase price, the purchase value. And how do we calculate this purchase value? Let's take a simple example here only. Suppose you have purchased 1000 units from your supplier and the purchase price per unit is rupees 10, okay, per unit. So what will be your purchase value here? So rupees 10,000. That's it. This is how we calculate the purchase value, which is a very important component of your total cost. So first component of total cost is purchase value. Now let's discuss the next one, which I think that most of you must be hearing first time. Okay, let me tell you something. Next two more components are left of total cost. This is what I am telling you. Two more concepts are left. But what is the name of those items? That I will not disclose right now. What we'll do, we will understand with the help of one simple example. Okay, so this is one point here and this is another point and this is our straight. Okay, this point, okay, what you are going to do, you will invite quotations from different suppliers, not just one supplier, different suppliers. See, what happens when we purchase, when we decide to purchase material, we cannot go to one supplier and say, okay, give us this much quantity. We invite quotations, okay, we send invitations to different supplier, let's say A, B, C, D, and we tell them, listen, we want to purchase this much quantity, please send us your quotations. Please send us, can you sell us this much quantity, this quality of product, and what price? The most important, are you going to charge? Are you going to give us any discount? So at this point, you are just inviting the quotations. Now, what do you think? Inviting quotations from supplier attracts some cost? Yes or no? Yes, sir, because someone is sitting in your office and sending the invitations to different suppliers, communicating with them. So yes, there is some cost associated with this inviting quotations. C means here cost. Okay. Now, after inviting quotations, obviously you will finalize one of the quotation. Okay, that yes, now we are going to purchase from this supplier. Okay. So once that is finalized, okay, the next thing is you will prepare purchase order. You will prepare what? Purchase order, known as PO. And preparing purchase order, that is a documentation. So again, some costs will be involved here also in preparing the purchase order or other documentations. Now once that is done, pay attention, purchase order is done. Okay. Now your supplier will supply material to you, to your warehouse, to your godown. So some transportation cost will be incurred. Yes, sir. Some transportation cost will be incurred. So again, there is some cost involved here in transportation. Now, once that material received your warehouse, once that material you got at your warehouse, obviously there will be some minor or maybe a major inspection. Okay. So here you will have the inspection also of your material. So obviously, sir, if you are doing inspection, there will be some cost associated with the inspection also. So from this point till this point, you have incurred inviting quotations from supplier cost, in documentation cost, for example, purchase orders, transportation, inspection cost. Now, so any cost, pay attention now, which you have incurred from this point till this point, okay, is known as ordering cost, and this ordering cost shall form part of your total cost. So from this point, when you started inviting quotations from your supplier till this point, when you, what is this point? When you received the material, okay, in your warehouse. Okay, till this point, whatever cost you have ordered is known as your ordering cost. And don't you think this ordering cost shall form part of your total cost of material? Yes, sir. So one thing is very clear here, that while calculating the total cost, okay, purchase price, purchase value is definitely part of cost. The second component is my ordering cost. This is what you need to add your ordering cost. And what is all covered under ordering cost? We just saw. Okay. Now let's move to the next point. Listen very, very carefully like you listened earlier. Once you received your material in your warehouse, what will you do with this material? Think about it. What will you do with this material? Just pause the video right now and think about it, that what you are going to do with this material. Sir, obviously we purchase the material so that we can use this material in the production process. But do you think that immediately you are going to use the material for production process? Don't you think you are going to hold the material? Don't you think you are going to store this material first in your warehouse? And suppose if you have ordered, let's say how much quantity we have purchased here? 1000 units. So are you going to think that you are going to use entire 1000 unit right away? No, sir. Definitely we are going to hold some material in the warehouse for some time. So when you hold material in your warehouse for some time, you incur holding cost. So from this point onwards, okay, what will happen? Sir, we need to store the material in our godown. So we will incur some storage cost. Like your rent of the warehouse. This is the storage cost which you have to incur. Okay. So this rent is your cost. Okay. Then also the goods which are stored in your warehouse, don't you think you have to do the insurance for them? What will happen if there is a fire in the godown? There is a loss, na? So we insure our stock also. Okay. So this insurance is your another cost. Okay. Then there is one more cost, obsolescence. So what do you mean by obsolescence cost? Very simple. Suppose you have 1000 units in your godown. Let's say, just for the sake of example, out of that 1000 units, 20 units are obsolete. Obsolete means outdated. Outdated, out of fashion, they are of no use to you right now. So whatever cost you have incurred on them, on those obsolete units, that is also your cost. Okay. And there is one more cost, that is, pay attention on this one, funds invested. Funds invested in stock. So whatever stock you are holding, some funds, I mean, you have purchased that stock, na? So you have invested some funds on that. Okay. So that is also your cost. Okay. So one thing is very clear here, that from this point onwards, once we receive the material in our warehouse, from this point onwards till this point, sir, what is this point? At this point, you will issue the material for production. Okay. So from this point, then up until this point, you will incur some costs, and these costs are known as your holding cost. Why you are incurring all these costs? Because you are holding the material in your warehouse. That's why these holding costs are being incurred, also known as carrying cost. So this is your second cost. Okay, this is your second cost which you were not knowing earlier. Okay, we saw first ordering cost, then holding and carrying cost. So let's go back to our summary. And so now we know in total cost, the first thing is purchase value, that is purchase price multiplied by quantity. Then you have to add your ordering cost. We know what is ordering cost and at what time period this ordering cost is incurred. From the time you invite quotation till the time your material reach your warehouse. And once the material reach to warehouse till the time material issue for production, you incur holding cost. So the third component of my cost is holding cost or carrying cost. Okay, this is the third component of my cost. So now we know what all things are included in the total cost. Okay, so I would like you guys to please write this down on your notebook, this summary, and I also want please write down this example. So whenever you have any confusion in this ordering cost and holding cost, you can simply revise this diagram. Okay. Okay, so let's start our next topic in the material chapter, and that is total carrying cost. So in the previous session we discussed total ordering cost, and before that we discussed total cost. Now in the discussion of total cost, we did discuss the carrying cost conceptually. So we know what is carrying cost. It includes your storage cost, the rent of the factory, godown, insurance of your stock, obsolescence cost, and any funds invested in the stock. Now here, right now, what we need to discuss is how to calculate this total carrying cost. Conceptually we know what is carrying cost, but now we will calculate our total carrying cost. So in order to calculate the total carrying cost, okay, think very carefully and also listen. In order to calculate what is my total carrying cost, okay, the first thing which I should know is how much inventory we are carrying. Okay, so the first thing is how much inventory, okay, we are carrying in our godown, in our storeroom. Now hold your thought right now. Okay, how much inventory we are carrying. Now let me make you guys understand this concept with a very basic example from our household. So for example, in your home you have rice. Okay, now if I ask you how much rice on an average you hold in your kitchen in a box. Suppose this is a box, okay, where you keep your rice. And if I ask you how much rice, quantity of rice in kilogram you hold on a particular day in this box. So today in the morning it was 4 kilograms. Okay, next day. So next day it will be 3 point something kilogram, because something you will consume also. Next day 3 point something again, then maybe 3, then maybe 2 point something, then 2, like this. Then again you will place the order. Again the box will get full. So see, understand the problem here. The problem is, if I ask you that on an average how much quantity you are holding in this box, you cannot tell me, because every day you are consuming something. Every day the inventory you are carrying, you are holding, this rice I'm talking about, is changing. So my requirement is how much inventory we are carrying. Do you think in a year there are 365 days? So are we going to write the carrying inventory 365 times? Okay, sir, on first day this much inventory I am carrying, second day this much inventory, third day this much. Obviously no. Okay, so for the sake of simplicity, pay attention now. For the sake of simplicity, we have a standard assumption here. What we have? We have a standard assumption. Okay, and the assumption is that the inventory which I am carrying in my godown, in my warehouse, is equals to half of my order size. So whatever quantity I am ordering to my supplier, okay, whatever quantity I am ordering to my supplier, half of that is I am going to hold. So half of order size is the inventory which I am going to carry. So this is known as my average stock. Okay, it means that on an average, entire year, pay attention, entire year, on an average, I am going to hold this much quantity in my godown. So every day in my godown, this much quantity will be there. Comfortable with the concept of average stock. Okay. Now I know that you must be thinking right now, that's why this standard assumption. That's why we discuss first the problem. You cannot write down the 365 days inventories and calculate. That's not possible. And also, okay, there's one more reason. For the sake of simplicity, for the sake of comparison between different companies, suppose one company is taking this much average, second company is taking this much average, third company is taking this much average as per their own wish. Okay, then how you are going to compare them? Okay, so for the sake of simplicity, for the sake of comparison, we have this standard assumption which says your half of your order size is the average stock which you are carrying. And remember, this is the average stock which we are carrying the entire year, not just for one day or 1 month. For the entire year, every day, this stock I am carrying with me. So, in order to calculate the total carrying cost, the first thing we needed was how much inventory we are carrying. So, how much inventory we are carrying? Sir, half of order size. So, one thing is clear now, that how much inventory we are carrying. Now, what I am going to do, in the previous example of total ordering cost, we calculated the order size. And what was the order size? The order size was 2000 kilogram. So, therefore, what will be my average stock now? Sir, my average stock will be equals to half of this order size of 2000 kilogram. So, that will be 1000 kilogram. Okay, so 1000 kilogram is my average stock. So, on an average, every day, I am carrying 1000 kilogram in my warehouse. Now, in order to calculate this total carrying cost, one thing we know how much inventory we are carrying. The second thing which we need is, pay attention, what is my carrying cost per unit per annum. Okay, in short, we will write carrying cost per unit per annum. Okay, so in order to calculate the total carrying cost, okay, we need that how much is my carrying cost? How much is my carrying cost on 1 unit and for per annum, entire year. Okay, so please understand the meaning of this term, carrying cost per unit per annum. This means your cost, okay, your cost for 1 unit, your carrying cost for 1 unit for the entire year. For the entire year, what is your carrying cost for 1 year? Okay, now let's say your carrying cost per unit per annum. Now in exam, in your notebook, don't write the short form, please write the full form only. Okay, now let's say your carrying cost per unit per annum is rupees 10. Now let's get back. What we were calculating? Sir, we were calculating total carrying cost. Okay, and in order to calculate total carrying cost, the first thing which we needed was how much inventory we are carrying. Pay attention, listen very carefully. In order to calculate this, we needed how much inventory we are carrying. And how much inventory we are carrying? Sir, this average stock. We need to calculate average stock, and this is the formula for calculation of average stock, half of order size. Okay, and remember, this average stock means basically the stock you are carrying for entire year, not just one day. Okay, the second thing we needed was what is the carrying cost per unit? What is the carrying cost per unit for entire year? One thing, the first thing we know that how much inventory I am carrying entire year, and now I know what is my carrying cost for 1 unit for the entire year, that is per annum, 10. So can we derive the formula of total carrying cost? Yes, sir. So just pause your video and write down the formula on your own. Then again resume the video. Okay. So total carrying cost is equals to average stock multiplied by carrying cost per unit per annum. Write the full form only. Okay. Average stock was how much? 1000 kilogram. Okay, on an average I am carrying 1000 kilogram with me entire year, and the cost of carrying this inventory for entire year for per annum is rupees 10. Therefore my total carrying cost is 10,000 rupees. This is how we calculate carrying cost, and this is the formula for the calculation of total carrying cost. Okay, so once again let's quickly see. So what we did here, in order to calculate carrying cost, we need how much inventory we are carrying. The formula for how much inventory we are carrying is half of order size, which is also an assumption in itself, and a standard assumption which you have to take. So after applying this assumption, this formula, we came to know that our average stock is half of our order size, which is 2000 kilogram. This I took from the previous example, okay, of total ordering cost. Half of that 1000 kg. So one thing is fulfilled. Now we want to know what is my carrying cost per unit per annum. Okay, so that is 10 rupees. So after multiplying this 10 rupees with my average stock, I got to know my total carrying cost. Okay, now with this, we know how to calculate the total cost. Sir, what you are talking about? Pay attention. So we discussed in this one of the session our total cost, which was equals to purchase value, ordering cost, carrying cost. We know how to calculate the purchase value, number of units into purchase price. We know how to calculate the ordering cost. Now we know how to calculate the carrying cost. Okay, please write down this example on your notebook. Okay, whatever is written, you have to write down on your notebook. Okay. Hello students. Okay, so now we'll see the concept of total ordering cost. In the previous discussion, okay, we saw that what is ordering cost. Okay, this was the presentation of our previous discussion where we discussed what is this ordering cost. So now we know conceptually what is ordering cost. Okay, like invite, quotations, purchase order, transportation, inspection. Okay, now we will discuss how to calculate the total ordering cost. Now understand, because now this is very important. Okay, I'll tell you why. Because now slowly we are coming to the part where we have to do the actual calculation. Okay, so now I want all of you to pay 100% attention. Now sir, is there any formula to calculate this total ordering cost? Okay, so yes, obviously there is a formula, but again, first we need to understand the logic behind, okay, that how the formula is devised, and then I'll show you the formula also. But first please just pay attention that how this formula is derived. Okay, so what we are going to do, we will be starting with a simple example, very simple example. Okay, suppose for example my annual requirement of material is equals to 10,000 kilogram. Okay, so this is the annual requirement of material. Now sir, what do you mean by annual requirement of material? The line is self-explanatory, but still let's discuss it. Annual requirement of material means that in a entire year you need total 10,000 kilogram of material for your production. Now think about this. Are you going to order this 10,000 kilogram of material, okay, at once only? For example, at the start of the year, let's say your year starting date is 1st January. On 1st January, you ordered 10,000 kilogram. Sir, obviously no. Because if you order 10,000 kilogram at the start of the year, that means unnecessary you are holding your material. So the thing is, what you are going to do, how you are going to place order for this 10,000 kilogram over the year. Ask this question to yourself. You will get the answer that sir, we have to place order in certain fixed quantity. For example, we will place a order for 1000 kilogram, then we'll wait for maybe 1 month, again 1000 kilogram, wait, again 1000 kilogram, wait. Like this, in 10 months, we can place all the 10,000 kilogram. Or what we can do, sir, 2000 kilogram order we can place. Again after a few months 2000, again after a few months 2000, like this. So there are different options available to you. Okay, so what I am going to do, okay, for this example, I am going to take an order size of 2000 kilogram. That means every time when I am placing an order to my supplier for raw material, okay, my order size is of 2000 kilogram. Okay, now sir, what do you mean by the term order size? Order size means quantity ordered at each order. Okay, so quantity, the number of kilograms or maybe the number of units which we are ordering at each order. This is your order size. Okay, simple so far. So we have two information so far, that is the annual requirement of our material and our order size. Now let's discuss this further. Suppose in your first order, okay, what will be your order size? 2000 kilogram. Now second order, sir, second order will be 2000 kilogram. Third order, sir, third order will also be 2000 kilogram. Fourth order, sir, fourth order will be of 2000 kilogram. And the last, that is your fifth order, will also be of 2000 kilogram. Total 10,000 kilograms. Your annual requirement is fulfilled. So how many total number of orders you placed in a year? Sir, 1, 2, 3, 4, 5. Total number of orders is 5. But sir, is it necessary that every time we place 2000 units of order? Can't we do like this? 2000, then after some months 1000, then after some month 4000, then the balance quantity. Okay, see, generally I'm talking about practically in the manufacturing organization, the order size is kept fixed. The order size is kept fixed for the calculation, but the calculations becomes easy, and also it's confusing if you have different order sizes. Okay, so your order size is fixed here, that is 2000 kilogram. Now if I ask you, pay attention, listen very carefully. If I ask you, tell me that how many number of orders you have to place in this year. How many number of orders you have to place in this year? If annual requirement is 10,000, order size is 2000. You will say, sir, 5. See, 1, 2, 3, 4, 5 order. Now, if I ask you, derive the formula. Create the formula on your own. So just pause your video, okay, right now, and think about what could be the formula. Okay, so the formula will be annual requirement of material divided by order size. Simple. So therefore 10,000 kilograms divided by 2000 will give you 5 number of orders. Okay, this is how you calculate your number of orders. Simple so far. Okay, so what we know so far, sir, we know the annual requirement, we know the order size also, and now we know the number of orders. Now let's see ordering cost. When you place an order, from our previous discussion we know that every time when we place an order, okay, there is some ordering cost which we need to incur. So how this ordering cost we are going to calculate? Listen carefully on my words. What I just said, that how this ordering cost we are going to calculate. Answer is no. You don't have to calculate ordering cost. You don't have to calculate your ordering cost for each order. It will be given in the question itself. So that's a very good point for you, that in the question your ordering cost, okay, your ordering cost per order will be already given. Okay, still, what if, sir, it's not given? What if my ordering cost per order is not given? Institute wants me to check, institute wants my knowledge, whether I know how to calculate this ordering cost. Then what you will do, just add the cost of these items. You will get your ordering cost. Okay, now, but otherwise you will get your ordering cost per order in the question always. Okay, now let's say my ordering cost per order is rupees 2000. Okay, this is just an example. My ordering cost per order, that means every time when I place an order of raw material, 2000 rupees I have to incur every time. Now, how many number of orders I am placing in 1 year? 5. And what is my ordering cost per order? 2000. So can we now calculate my total ordering cost. Now just stop the video, pause the video here and think about the formula of total ordering cost. Sir, the formula will be number of orders placed multiplied by ordering cost per order. This is your formula. Now let's put the numbers. Okay, so number of orders was 5. Ordering cost per order, which will be given in the question, 2000 rupees. Therefore, my total annual ordering cost is rupees 10,000. Now, let's go back to the heading. See, total ordering cost, this is what we needed to calculate. And I told you the formula. Okay, so this is the formula for total ordering cost. Simple, very, very simple. Now, you know the concept of total ordering cost and also you know how to calculate it using the formula. Okay. Now, what I am expecting from you, please write down this example on your notebook in a very neat handwriting so that later on you can revise from this whenever you have any confusion about what is this total ordering cost, how to calculate this. Okay, so please write it down. Hello students. Okay, now let's continue the discussion which we were having earlier. Okay, so back to reorder quantity and just focus on this last point. Are you sure that at 2000 kilogram of reorder quantity, that is your order size, your total ordering cost and your total carrying cost is minimum? I told you, okay, we are not sure. But sir, why we are not sure? Because we don't know how much is my total ordering cost and carrying cost if I order more than 2000 kilogram or if I order less than 2000 kilogram. So what we are going to do now is we are going to take two cases here, case A and case B. At case A, I am going to take reorder quantity, which is also known as order size, okay, order size as 1000 kilogram, and case B where I am going to take my reorder quantity as 4000 kilogram. Now I want all of you to pay 100% attention here. This is one of the most important concept in your chapter material from examination perspective, I am saying. So what I am doing here, I am taking my reorder quantity, or you can call it as order size, as 1000 kilogram and 4000 kilogram. And what is my annual requirement? Let's see from the previous questions which we solved. For example, this total ordering cost, we took the annual requirement as 10,000. So I'm keeping the same number so that there is no confusion. So my annual requirement is 10,000. But what I have changed here, sir, you have changed the ordering quantity. Your ordering quantity was 2000. But now you are taking at 1000 and 4000 kilograms. So you have changed it. Now think about it. Pay attention and pay 100% attention again, I am saying. Okay. So I am writing one point here. What if we increase our ROQ, that is your reorder quantity? What if we increase our ROQ? What will happen if my ROQ is increased? Okay, and the second point which I am writing is, what if we decrease our ROQ? So I have taken both the cases here. What will happen if we increase the ROQ? What will happen if we decrease the ROQ? Now pay attention. This is your point number 1 where I have increased the ROQ. Okay, and here I have decreased the ROQ. Now pay attention. Annual requirement is 10,000 kilograms. So in a year you need 10,000 kilogram of raw material, and every time when you are placing an order, you are ordering 1000 kg, not 2000, 1000 kg. Therefore, tell me what will be your number of orders. So it's very simple. How? Pay attention. When we calculated the total ordering cost, okay, this was the formula for your number of orders. Okay, annual requirement divided by order size. Okay, so let's get back to this. Annual requirement 10,000 kg. Order size is 1000 kg. Therefore, my number of orders is 10. Okay. Now, what will be the number of orders in case B? Sir, it will be 10,000 divided by order size 4,000. So, it will be 2.5. So, my number of orders are 10 if I am ordering 1000 kilogram every time. My number of orders will be 2.5 if I am ordering 4000 kilogram every time. Simple? Yes, very simple. Now, what was your ordering cost per order? Sir, my ordering cost per order was, pay attention, 2000 rupees. Okay. Now, let's get back to the problem. So, I'll write it here. Ordering cost per order, okay, is equals to 2000, and same will be applicable here also, 2000. So, can we now calculate our total ordering cost? Yes, sir. Our total ordering cost. What is the formula for total ordering cost? Let me show you. The formula for total ordering cost is number of orders multiplied by ordering cost per order. Okay. So, let me get back to this. Number of orders, how many? 10. Ordering cost per order, 2000. So, 10 into 2000. Therefore, your total ordering cost is 20,000 rupees. What will be my total ordering cost in case of case B? So, it will be 2.5 number of orders into 2000. So, 2000 into 2.5 will give you 5,000 rupees. So, my total ordering cost, okay, if I place order of 4000 kilogram every time, will be 5,000 rupees. Simple. Now, pay attention. There was one question which I have written here. What if we increase our ROQ? So, if you increase your ROQ, which is the case B here, see, your ROQ is now 4000 kilogram. Okay, what will happen? Sir, it's very simple. If we increase our ROQ, okay, pay attention. Write down first point inside this. Sir, the number of orders will decrease. Earlier, how many number of orders were there when we were ordering 2000 kilogram? 5. Now, the number of orders are only 2.5. One thing. Second thing, okay, your ordering cost. What was your ordering cost at 2000 kilogram? Sir, my ordering cost at 2000 kilogram was 10,000 rupees. Now, how much is your ordering cost at 4000 kilogram of order quantity? See, it's only 5,000. So, pay attention. The total ordering cost will, okay. So, great thing or not? Yes, sir, it's really great. We are saving on our total ordering cost if number of orders gets increased. If order quantity gets increased and because of that your number of orders gets decreased, your ordering cost has to be get down. Now, this is a very good news. Okay. Now, let's get back to the second point, which says, what if we decrease our reorder quantity? Sir, if we decrease our reorder quantity, which is in case number A, see 1000 kilogram, the number of orders gets increased from 5, now it's 10. Okay, and your ordering cost, which was 10,000 rupees, now it's 20,000 rupees. So, let me write this down here. Okay, point A, number of orders will increase. Okay, and point number B, total ordering cost will increase. So, is this good? Your total ordering cost is increasing? No, sir, this is not good. We are expending more on our ordering cost now. Okay, so I hope so far this is clear what we have discussed. Now, we will discuss about the carrying cost. Okay, in both these two cases. Okay, in both these two cases, we will see what will be our carrying cost. But first, we will see that how do we calculate the carrying cost. Okay, so pay attention. How do we calculate the total carrying cost? It's very simple. Average stock into carrying cost per unit per annum. And like I told you, this carrying cost per unit per annum will be given in the question itself always. Okay, and second thing, your average stock. How do we calculate average stock? Sir, average stock means half of order size. Order size means your reorder quantity. Okay, now let's write some numbers here for carrying cost. Okay. So what is your carrying cost per unit per annum? So let's get back to that question which we solved earlier. Carrying cost per unit per annum was 10. Okay, simple. Okay, let me write, it's 10 and here 10. Okay, and what will be your average stock now? Sir, average stock formula is half of order size. Now, what is your order size here? 1000 kilogram. So, let's take half of it. Okay. So, 1000 into half. What is the order size in second case? So, it was 4000 kilogram. Let's take half of this. So, my average stock is 500 and here it is 2000 kilogram. Okay. 5000 kilogram and 2000 kilogram. Now we know carrying cost per unit per annum. We know our average stock. Can we calculate total carrying cost? Yes, sir. We can easily calculate total carrying cost now, which will be equals to 10 multiplied by 500. Here 10 multiplied by 2000 kilogram. So this is coming 5000 rupees. Okay. And this is coming 20,000 rupees. Okay. Now, so your total carrying cost, if we order 1000 quantity, is 5000, and your total carrying cost if we order 4000 kilogram of quantity at each order is 20,000 rupees. Okay, so now let's come to this. Okay, these 2 points, pay attention. So what if we increase our ROQ? So after increasing the reorder quantity, it was 4000 kilograms. Okay. So if we increase our reorder quantity, we just saw that number of orders will decrease, and if your number of orders gets decreased, your total ordering cost will also decrease. Now third point which I am going to write here is about the carrying cost. So at 4000 kilogram, okay, what was your carrying cost? Sir, my total carrying cost was 20,000 rupees. Okay. Now what was your total carrying cost at 2000 kilogram of orders? Pay attention. See, it was 10,000 rupees we calculate. So what should I write here then? It's very simple. Sir, if we increase the ROQ, okay, from 2000 to 4000 kilogram, total carrying cost will increase. 4. If we decrease the ROQ, okay, that is from 2000 kilogram to 1000 kilogram, okay, our total carrying cost, what will happen? Sir, it will decrease. Let's check whether it's decreasing or not. Okay. So let me show you. Yes, it is coming 5000 rupees, and earlier it was at 2000 kilogram 10,000 rupees. Now it's only 5000 rupees. Now let me tell you something. Pay attention on this. Okay. Can you see the dilemma here? Dilemma. Sir, what is the dilemma here? Dilemma is very simple. If you increase your ROQ, that is from 2000 kilogram to 4000 kilogram, okay, the number of orders will decrease. Obviously, if you're ordering quantity, see, your annual requirement is 10,000. Your annual requirement is 10,000. But now your order size is increased. So obviously your number of orders will get down. You can fulfill this requirement of 10,000 in less number of orders. Na? So obviously your ordering cost, which depends on number of orders, will also get decreased. But since you are ordering more quantity now, you need to hold more quantity, your carrying cost will increase. This is the dilemma. If you increase your ordering quantity, your ordering cost is decreasing, but your carrying cost is increasing. Now, sir, okay, then we will decrease our reorder quantity. See, if you decrease your reorder quantity, what will happen? This annual requirement of 10,000, you have to fulfill now at 10 orders. Your number of orders increase, and because of that, your ordering cost gets increases. And now, since you are ordering only 1000 kilogram, you have to hold less, your carrying cost will decrease. But again, there is a dilemma. One cost is increasing, one cost is decreasing in both the cases. So basically, we need to come up at a quantity. Okay, we need to come up at the quantity where both our ordering cost and carrying cost is minimum. Now, pay very good attention, okay, to what we are going to discuss. How much is my total? How much is the total of your ordering cost, okay, and your carrying cost if you are placing an order of 1000 kilogram every time. Okay, so it's very easy. It will be, I'll write here, therefore total cost, okay, total cost here means total ordering cost, okay, and total carrying cost. It's coming 20,000 and 5,000, so that will be 25,000 rupees. Okay, pay really close attention now. And what is your total ordering and carrying cost if you are placing order of 4,000 kilogram every time? So it will be 5 and 20. So again it's coming 25,000 rupees only. Now pay attention. So let me make a short summary of total cost. And here total cost means total ordering cost plus total carrying cost. Okay, this is just short forms, but in exam you have to use, and in notebook also you have to write the full form only. Okay, now if my order quantity is 1000 kilogram, okay, and if my order quantity is 4000 kilogram, and if my order quantity is 2000 kilogram, okay, I am talking about this one which we took while calculating the total ordering cost, this. Okay, so I am making the three cases here. It's very simple. 2000 kilograms. So if I am ordering 1000 kilogram every time I place an order, okay, and if I place the order of 4000 kilogram every time and the order of 2000 kilogram, what will be my total cost? Sir, in case of 1000 kilogram, it's 25,000 rupees. In case of 4000 kilogram, it is again 25,000 rupees. And in case of 2000 kilogram, sir, that we don't know, but yes, we can easily find it out. See, at 2000 kilogram, how much was your ordering cost coming? Sir, it was 10,000 rupees. Okay. And how much was your carrying cost coming? So it was 10,000 rupees, both were same. So what will be your total cost if you order 2000 kilogram every time? So it will be 10,000 total ordering cost plus 10,000 total carrying cost. Total is 20,000 rupees. Now just look at this table, okay, and think about it. What number of quantities you want to order every time you place an order to your supplier? It means what should be your reorder quantity? Is it should be 1000 kilogram, 4000 kilogram or 2000 kilogram? Sir, it should be 2000 kilogram, and the reason is very simple. At 2000 kilogram, my total cost, that is total ordering cost and total carrying cost, is minimum. See, here it's 25, here it's only 20. So the question which we wrote earlier, pay attention, the question which we wrote down earlier, this one. Are you sure that at 2000 kilogram of ROQ, that is reorder quantity, your total ordering and total carrying cost is minimum? We said not sure, but now we are sure. Yes, it is minimum. It is minimum, and we just proved that with this simple example. Okay, your total cost, okay, is minimum if you order 2000 kilograms. So if you order less than 2000 kilogram, see, your cost has increased. If you order more than 2000 kilogram, your cost has again increased. Okay, so now we know that at 2000 kilogram, my total ordering and carrying cost is at minimum. So now pay attention, the ordering quantity, okay, where total ordering cost and total carrying cost is minimum is known as economic order quantity. Okay, so it is known as economic order quantity. So this is your topic which I was earlier talking about, the most important topic, EOQ, also known as EOQ in short, and full form is economic order quantity. So what is economic order quantity? Pay attention, listen very careful. Sir, economic order quantity is the quantity where my total ordering cost and my total carrying cost is minimum. So in this example, can we say that 1000 kilogram of order quantity is EOQ? No, this is just a reorder quantity. 4000 kilogram is just a reorder quantity. 2000 kilogram is economic order quantity, because here your total ordering and carrying cost is minimum. This is the concept of EOQ. Okay. Now listen very carefully. Now you must be thinking that, sir, in the exam, suppose we have one question where we need to calculate EOQ. Are we going to follow this approach, this whole process? Okay, are we going to do this trial and error method? Answer is no. There is no trial and error method here. Okay, what you need to do, pay attention, very good thing. There is a formula to calculate this economic order quantity. Then, sir, why did we discuss everything? Because to understand the logic that every ordering quantity cannot be an economic order quantity. You should know that. That's why we discussed everything. But now we'll see what is the formula for economic order quantity, which is a very important topic. And now let me write down its formula. So formula is very simple. 2 multiplied by annual requirement multiplied by ordering cost per order whole divided by carrying cost per unit per annum and under root. So now let's solve this problem. Same information with this formula. So 2 multiplied by, what was your annual requirement, sir? 10,000 kilogram. What was your ordering cost per order? Sir, it was 2000 rupees. And what was your carrying cost per unit per annum? Sir, it was 10 under root. Now please solve this and let's see how much is our economic order quantity coming. So 2 into 10,000 into 2000 divided by 10 under root, it's coming 2000 kilogram. This is your economic order quantity, and as per our trial and error method, we also got the same answer of 2000 kilogram. Okay, but yes, in exam you don't have to do this trial and error, you have to use this formula. Okay, now this formula is basically a mathematically devised formula using different functions of mathematics, and obviously which we are not going to discuss here. Okay, now what you guys need to do, you have to write this formula, and however there is no requirement that you should be writing this. Okay, this is just for explaining you the concept, and I hope now this concept of EOQ is clear to you. Hello students. Okay, now let's continue the discussion which we were having earlier. Okay, so back to reorder quantity and just focus on this last point. Are you sure that at 2000 kilogram of reorder quantity, that is your order size, your total ordering cost and your total carrying cost is minimum? I told you we are not sure. Okay, we are not sure. But sir, why we are not sure? Because we don't know how much is my total ordering cost and carrying cost if I order more than 2000 kilogram or if I order less than 2000 kilogram. So what we are going to do now is we are going to take two cases here, case A and case B. At case A, I am going to take reorder quantity, which is also known as order size, okay, order size as 1000 kilogram, and case B, where I am going to take my reorder quantity as 4000 kilogram. Now I want all of you to pay 100% attention here. This is one of the most important concept in your chapter material from examination perspective, I am saying. So what I am doing here, I am taking my reorder quantity, or you can call it as order size, as 1000 kilogram and 4000 kilogram. And what is my annual requirement? Let's see from the previous questions which we solved. For example, this total ordering cost, we took the annual requirement as 10,000. So I'm keeping the same number so that there is no confusion. So my annual requirement is 10,000. But what I have changed here, sir, you have changed the ordering quantity. Your ordering quantity was 2000. But now you are taking at 1000 and 4000 kilograms. So you have changed it. Now think about it. Pay attention and pay 100% attention again, I am saying. Okay. So I'm writing one point here. What if we increase our ROQ, that is your reorder quantity? What if we increase our ROQ? What will happen if my ROQ is increased? Okay, and the second point which I am writing is, what if we decrease our ROQ? So I have taken both the cases here. What will happen if we increase the ROQ? What will happen if we decrease the ROQ? Now pay attention. This is your point number 1, where I have increased the ROQ. Okay, and here I have decreased the ROQ. Now pay attention. Annual requirement is 10,000 kilograms. So in a year you need 10,000 kilogram of raw material, and every time when you are placing an order, you are ordering 1000 kg, not 2000, 1000 kg. Therefore, tell me what will be your number of orders. So it's very simple. How? Pay attention. When we calculated the total ordering cost, okay, this was the formula for your number of orders. Okay, annual requirement divided by order size. Okay, so let's get back to this. Annual requirement 10,000 kg, order size is 1000 kg. Therefore, my number of orders is 10. Okay, now what will be the number of orders in case B? Sir, it will be 10,000 divided by order size 4,000. So it will be 2.5. So my number of orders are 10 if I am ordering 1000 kilogram every time. My number of orders will be 2.5 if I am ordering 4000 kilogram every time. Simple? Yes, very simple. Now, what was your ordering cost per order? Sir, my ordering cost per order was, pay attention, 2000 rupees. Okay. Now, let's get back to the problem. So, I'll write it here. Ordering cost per order, okay, is equals to 2000, and same will be applicable here also, 2000. So, can we now calculate our total ordering cost? Yes, sir. Our total ordering cost. What is the formula for total ordering cost? Let me show you. The formula for total ordering cost is number of orders multiplied by ordering cost per order. Okay. So, let me get back to this. Number of orders, how many? 10. Ordering cost per order, 2000. So, 10 into 2000. Therefore, your total ordering cost is 20,000 rupees. What will be my total ordering cost in case of case B? So, it will be 2.5 number of orders into 2000. So, 2000 into 2.5 will give you 5,000 rupees. So, my total ordering cost, okay, if I place order of 4000 kilogram every time, will be 5,000 rupees. Simple. Now, pay attention. There was one question which I have written here. What if we increase our ROQ? So, if you increase your ROQ, which is the case B here, see, your ROQ is now 4000 kilogram. Okay, what will happen? Sir, it's very simple. If we increase our ROQ, okay, pay attention. Write down first point inside this. Sir, the number of orders will decrease. Earlier, how many number of orders were there when we were ordering 2000 kilogram? 5. Now, the number of orders are only 2.5. One thing. Second thing, okay, your ordering cost. What was your ordering cost at 2000 kilogram? Sir, my ordering cost at 2000 kilogram was 10,000 rupees. Now, how much is your ordering cost at 4000 kilogram of order quantity? See, it's only 5,000. So, pay attention. The total ordering cost will, okay. So, great thing or not? Yes, sir, it's really great. We are saving on our total ordering cost if number of orders gets increased. If order quantity gets increased and because of that your number of orders gets decreased, your ordering cost has to be get down. Now, this is a very good news. Okay. Now, let's get back to the second point, which says, what if we decrease our reorder quantity? Sir, if we decrease our reorder quantity, which is in case number A, see 1000 kilogram, the number of orders gets increased from 5, now it's 10. Okay, and your ordering cost, which was 10,000 rupees, now it's 20,000 rupees. So let me write this down here. Okay, number 1, point A, number of orders will increase. Okay, and point number B, total ordering cost will increase. So is this good? Your total ordering cost is increasing? No sir, this is not good. We are expending more on our ordering cost now. Okay, so I hope so far this is clear what we have discussed. Now we will discuss about the carrying cost. Okay, in both these two cases. Okay, in both these two cases we will see what will be our carrying cost. But first we will see that how do we calculate the carrying cost. Okay, so pay attention. How do we calculate the total carrying cost? It's very simple. Average stock into carrying cost per unit per annum. And like I told you, this carrying cost per unit per annum will be given in the question itself always. Okay, and second thing, your average stock. How do we calculate average stock? Sir, average stock means half of order size. Order size means your reorder quantity. Okay, now let's write some numbers here for carrying cost. Okay, so what is your carrying cost per unit per annum? So let's get back to that question which we solved earlier. Carrying cost per unit per annum was 10. Okay, simple. Okay, let me write, it's 10 and here 10. Okay, and what will be your average stock now? Sir, average stock formula is half of order size. Now what is your order size here? 1000 kilogram. So let's take half of it. Okay, so 1000 into half. What is the order size in second case? So it was 4000 kilogram. Let's take half of this. So my average stock is 500 and here it is 2000 kilogram. Okay, 5000 kilogram and 2000 kilogram. Now we know carrying cost per unit per annum. We know our average stock. Can we calculate total carrying cost? Yes sir. We can easily calculate total carrying cost now, which will be equals to 10 multiplied by 500. Here 10 multiplied by 2000 kilogram. So this is coming 5000 rupees. Okay, and this is coming 20,000 rupees. Okay, now so your total carrying cost, if we order 1000 quantity, is 5000, and your total carrying cost if we order 4000 kilogram of quantity at each order is 20,000 rupees. Okay, so now let's come to this. Okay, these 2 points, pay attention. So what if we increase our ROQ? So after increasing the reorder quantity, it was 4000 kilograms. Okay, so if we increase our reorder quantity, we just saw that number of orders will decrease, and if your number of orders gets decreased, your total ordering cost will also decrease. Now third point which I am going to write here is about the carrying cost. So at 4000 kilogram, okay, what was your carrying cost? Sir, my total carrying cost was 20,000 rupees. Okay, now what was your total carrying cost at 2000 kilogram of orders? Pay attention, see, it was 10,000 rupees we calculate. So what should I write here then? It's very simple. Sir, if we increase the ROQ, okay, from 2000 to 4000 kilogram, total carrying cost will increase. 4, if we decrease the ROQ, okay, that is from 2000 kilogram to 1000 kilogram, okay, our total carrying cost, what will happen? Sir, it will decrease. Let's check whether it's decreasing or not. Okay, so let me show you. Yes, it is coming 5000 rupees, and earlier it was at 2000 kilogram 10,000 rupees. Now it's only 5000 rupees. Now let me tell you something. Pay attention on this. Okay, can you see the dilemma here? Dilemma, sir, what is the dilemma here? Dilemma is very simple. If you increase your ROQ, that is from 2000 kilogram to 4000 kilogram, okay, the number of orders will decrease. Obviously, see, your annual requirement is 10,000. Your annual requirement is 10,000. But now your order size is increased. So obviously your number of orders will get down. You can fulfill this requirement of 10,000 in less number of orders, na? So obviously your ordering cost, which depends on number of orders, will also get decreased. But since you are ordering more quantity now, you need to hold more quantity, your carrying cost will increase. This is the dilemma. If you increase your ordering quantity, your ordering cost is decreasing, but your carrying cost is increasing. Now, sir, okay, then we will decrease our reorder quantity. See, if you decrease your reorder quantity, what will happen? This annual requirement of 10,000, you have to fulfill now at 10 orders. Your number of orders increase, and because of that, your ordering cost gets increases. And now, since you are ordering only 1000 kilogram, you have to hold less, your carrying cost will decrease. But again, there is a dilemma. One cost is increasing, one cost is decreasing in both the cases. So basically, okay, we need to come up at the quantity where both our ordering cost and carrying cost is minimum. Now, pay very good attention, okay, to what we are going to discuss. How much is my total? How much is the total of your ordering cost, okay, and your carrying cost if you are placing an order of 1000 kilogram every time, okay? So it's very easy. It will be, I'll write here, therefore total cost, okay, total cost here means total ordering cost, okay, and total carrying cost. It's coming 20,000 and 5,000, so that will be 25,000 rupees, okay? Pay really close attention now. And what is your total ordering and carrying cost if you are placing order of 4,000 kilogram every time? So it will be 5 and 20. So again, it's coming 25,000 rupees only. Now pay attention. So let me make a short summary. Summary of total cost. And here total cost means total ordering cost plus total carrying cost. Okay, this is just short forms, but in exam you have to use, and in notebook also you have to write the full form only. Okay, now if my order quantity is 1000 kilogram, okay, and if my order quantity is 4000 kilogram, and if my order quantity is 2000 kilogram, okay, I am talking about this one which we took while calculating the total ordering cost, this, okay. So I am making the three cases here. It's very simple. 2000 kilograms. So if I am ordering 1000 kilogram every time I place an order, okay, and if I place the order of 4000 kilogram every time and the order of 2000 kilogram, what will be my total cost? Sir, in case of 1000 kilogram, it's 25,000 rupees. In case of 4000 kilogram, it is again 25,000 rupees. And in case of 2000 kilogram, sir, that we don't know, but yes, we can easily find it out. See, at 2000 kilogram, how much was your ordering cost coming? Sir, it was 10,000 rupees. Okay. And how much was your carrying cost coming? Sir, it was 10,000 rupees. Both were same. So what will be your total cost if you order 2000 kilogram every time? Sir, it will be 10,000 total ordering cost plus 10,000 total carrying cost. Total is 20,000 rupees. Now, just look at this table, okay, and think about it. What number of quantities you want to order every time you place an order to your supplier? It means what should be your reorder quantity? Is it should be 1000 kilogram, 4000 kilogram or 2000 kilogram? Sir, it should be 2000 kilogram, and the reason is very simple. At 2000 kilogram, my total cost, that is total ordering cost and total carrying cost, is minimum. See, here it's 25, here it's only 20. So the question which we wrote earlier, pay attention, the question which we wrote down earlier, this one. Are you sure that at 2000 kilogram of ROQ, that is reorder quantity, your total ordering and total carrying cost is minimum? We said not sure, but now we are sure. Yes, it is minimum. It is minimum, and we just proved that with this simple example. Okay, your total cost, okay, is minimum if you order 2000 kilograms. So if you order less than 2000 kilogram, see, your cost has increased. If you order more than 2000 kilogram, your cost has again increased. Okay, so now we know that at 2000 kilogram, my total ordering and carrying cost is at minimum. So now pay attention, the ordering quantity, okay, where total ordering cost and total carrying cost is minimum is known as economic order quantity. Okay, so it is known as economic order quantity. So this is your topic which I was earlier talking about, the most important topic, EOQ, also known as EOQ in short, and full form is economic order quantity. So what is economic order quantity? Pay attention, listen very carefully. Sir, economic order quantity is the quantity where my total ordering cost and my total carrying cost is minimum. So in this example, can we say that 1000 kilogram of order quantity is EOQ? No, this is just a reorder quantity. 4000 kilogram is just a reorder quantity. 2000 kilogram is economic order quantity, because here your total ordering and carrying cost is minimum. This is the concept of EOQ. Okay, now listen very carefully. Now you must be thinking that, sir, in the exam, suppose we have one question where we need to calculate EOQ. Are we going to follow this approach, this whole process? Okay, are we going to do this trial and error method? Answer is no. There is no trial and error method here. Okay, what you need to do, pay attention, very good thing. There is a formula to calculate this economic order quantity. Then sir, why did we discuss everything? Because to understand the logic that every ordering quantity cannot be an economic order quantity. You should know that. That's why we discussed everything. But now we'll see what is the formula for economic order quantity, which is a very important topic. And now let me write down its formula. So formula is very simple. 2 multiplied by annual requirement multiplied by ordering cost, order whole divided by carrying cost per unit per annum and under root. So now let's solve this problem. Same information with this formula. So 2 multiplied by, what was your annual requirement, sir? 10,000 kilogram. What was your ordering cost per order? Sir, it was 2000 rupees. And what was your carrying cost per unit per annum? Sir, it was 10 under root. Now please solve this and let's see how much is our economic order quantity coming. So 2 into 10,000 into 2000 divided by 10 under root, it's coming 2000 kilogram. This is your economic order quantity, and as per our trial and error method, we also got the same answer of 2000 kilogram. Okay, but yes, in exam you don't have to do this trial and error, you have to use this formula. Okay, now this formula basically a mathematically devised formula using different functions of mathematics, and obviously which we are not going to discuss here. Okay, now what you guys need to do, you have to write this formula, and however there is no requirement that you should be writing this. Okay, this is just for explaining you the concept, and I hope now this concept of EOQ is clear to you. Hello everyone. Now we'll see some simple questions, some tricky questions on the concept of economic order quantity. So I would like all of you to pay 100% attention. Okay, so whatever we have learned earlier, the formulas of EOQ, how to calculate total ordering cost, total carrying cost, okay, those things will be used here. Okay, so we'll go very slow while understanding the concepts. Concepts we have already understood. Now we have to apply those concepts here in the questions. Okay, so this is your first question, question number 1, in which we have the requirement of calculation of economic order quantity. I have written here EOQ, but what you need to do when you write this question, you have to write the full form. That's economic order quantity. So we need to calculate EOQ. So what we are going to do, first and the foremost thing, let's just write the formula for EOQ. And one more thing which I would like you guys to do, please maintain a separate sheet of paper, a separate notebook, maybe few sheets where you will be writing only and only the formulas. Okay, so far we have seen few formulas. For example, the formula of reorder level, how to calculate your total ordering cost, total carrying cost, how to calculate number of orders, EOQ. Okay, so just keep all the formulas at just one place, because in the next topics, next chapters, more formulas are going to come. Okay, so keep just all formulas at one place so that later on these formulas can be very handy for you. Okay, so let's write down the formula for economic order quantity, that is equals to 2 into annual requirement. Now, annual requirement of what, sir? Annual requirement of raw material, not finished product. We calculate economic order quantity, okay, with respect to our raw material, not finished product. So 2 multiplied by annual requirement of raw material multiplied by ordering cost. Sir, what ordering cost? Total ordering cost? No, per order, whole divided by your carrying cost. Sir, what carrying cost? Do we need to take total carrying cost? No, carrying cost for 1 unit. Okay, that's it. No, carrying cost per unit per annum for the entire year. Okay, and obviously you have to take root of this. Now we'll see the information given in the question. So annual requirement is given straightforward of 1 lakh units. Ordering cost per order is 700. Carrying cost per unit per annum is rupees 5. So in this question, this is a very simple question. Every information is given to you directly. Okay, so let's just put the numbers. So 2 multiplied by annual requirement of raw material, which is 1 lakh, multiplied by ordering cost per order, which is 700, whole divided by your carrying cost per unit per annum 5, take root. Okay, so now let's calculate. Let's see how much this is coming. 2 into 1 lakh into 700 divided by 5, take root. So this is coming 5291.502 units. But do not write like this. Do not write in decimals. What you need to do, just round it off to the next unit. So 5292 units. If you write this in the exam, okay, the chances are that it will be wrong. So please totally avoid this. Let's avoid this. Okay, I just avoided it. This is what you have to do. Just cut it down and this is your final answer, 5292 units. Okay, round it off. So a very simple problem we just solved on the calculation of EOQ. Now let's move to the next question. So this is your question number 2. Let's see the requirement of this question. You can see there are 2 requirements. Number 1 is you need to calculate the economic order quantity. Okay, sir. And number 2 requirement is the number of orders to be placed in a year. Okay, that means in 1 year, how many number of orders we will place. So what we will be doing now, pay very close attention. Sir, we will write the formula first. Okay, very good. If you are thinking this right now, that we have to write the formula first, that means now you are understanding. So first of all, let's write the formula for EOQ. Again, sir, we just wrote the formula. Yes, again we will write down the formula. So 2 into annual requirement. Whose annual requirement? Sir, raw materials annual requirement. Can we take finished goods annual demand here? No, sir, we don't take finished goods annual demand here. This is for, this EOQ is for the material only. Okay, multiplied by ordering cost. Ordering cost total? No, per order. Ordering cost per order. Whole divided by carrying cost. Total carrying cost? No, carrying cost per unit per annum. Okay, for 1 unit for the entire year, what is your carrying cost? That is what you need to take root of this. Okay, now can you see the second requirement? Obviously, number of orders to be placed in a year. Do you remember the formula for number of orders to be placed in the year? If you don't remember the formula right now, just pause the video. Okay, just pause the video, open your notebook. I mean, you still have your notebook, I know. Just flip some pages and see what is the formula for number of orders to be placed in a year. I want all of you just pause the video. Just on your page where you have solved the problem, you have calculated the ordering cost. Go there and you will find the number of orders formula. Okay. So the formula for calculation of number of orders to be placed in a year is equals to annual requirement divided by order size. This is the formula for number of orders. Okay, so what we have done, we have written the formulas. Now we'll see the information given in this question. So consumption of material is given and this is already given per annum. Sir, what if this is not given per annum? What will happen? They may give you per month. If they have given you per month, then just simply multiply it by 12. You will get the requirement of per annum. Why? Because in the formula you have to take annual requirement. In this question it is already given annually. Order placing cost per order is given, which is 50. Okay. Cost per kilogram of raw material. Now sir, what is this cost per kilogram of raw material? This is the purchase price of raw material. But sir, there is one confusion. In the formula there is no purchase price. See, where is the purchase price? Then why it is given? Trust me, this is a very important information. Why? In order to understand, you need to see this point. Storage cost is 8% on average inventory. Now, when we talk about storage, what comes to your mind? What type of cost is this? Is this your carrying cost or is this your ordering cost? Sir, we remember this is our carrying cost. Okay, storage cost, interest cost, obsolescence cost, all are carrying cost. So your carrying cost, that is storage cost, is 8%. Now, where you are going to apply this 8%? Now, remember and note down this point. If in any question your storage cost or carrying cost is given in percentage, okay, apply this on purchase price. Okay, apply this on what? Purchase price per unit. Why sir? Because when you apply this 8% on purchase price per unit, you will get your storage cost or carrying cost per unit. See, that is what we want here. Okay. But sir, suppose in a particular question, they are saying that this rate has to be applied on some other cost. For example, ordering cost. Then go ahead and apply on that. But remember, whenever you are applying the percentage, apply it on the per unit price so that you get your carrying cost or storage cost per unit only, because that is the requirement of. Okay, so now let's solve this problem. First we will calculate the economic order quantity. So 2 into annual requirement. What was our annual requirement? That was 10,000 kilogram. So into 10,000 kilogram into ordering cost per order. So 50 rupees is already given to us per order, divided by your carrying cost per unit per annum. So 8% into your purchase price, which is rupees 2. Take root of this and now let's calculate our EOQ, that is economic order quantity. So 2 into 8%, that is 0.16. Now let's calculate this. So that is coming 2,500 units. Okay. This is your economic order quantity. If you place 2,500 units at every order, your ordering and your carrying cost will be minimum. Now, the second requirement of the question was number of orders to be placed in a year. See the formula. Number of orders to be placed in a year. Annual requirement upon order size. How much units, pay attention, how much units we require annually? 10,000 kilogram. Okay, 1 second, units. Okay. So, how much kilogram of raw material we require each year, every year, annually? So, that is 10,000. And every time when we are placing order, how much quantities order we are giving? 2,500. So, pay attention. Annual requirement upon order size. Now, this EOQ which you just calculated, okay, you can call it as order size also. Okay, order size also. You can call it as order size also. Okay, see what is order size? When you are placing the order, how much quantity of order you are placing, that is order size. What is EOQ? When you are placing the order, how much quantity you are placing. Okay, and where obviously your costs are minimum. Okay, so number of orders is equals to annual requirement upon order size. Annual requirement is 10,000 kilogram. Order size is 2,500 kilogram. Therefore, my number of orders are 4. This is what they require. Simple, very simple. Okay, so I hope this question is clear. Now what you have to do, you have to write down the question and you have to write down these arrow marks also. Okay, and then you have to solve this problem. Okay, now let's move to the next question. Okay, now let's go through this question number 3. Okay, so this is the requirement of question where you need to calculate economic order quantity and the total cost. Okay, so this is something new. Okay, now pay attention how we are going to approach this type of question, sir. First we need to write down the formula. Okay, so the formula for EOQ is equals to 2 into annual requirement multiplied by ordering cost per order divided by carrying cost per unit per annum. So this is our formula for the calculation of economic order quantity. Take root of this also. Okay. Now the second requirement of question is calculation of total cost. Okay, in the second we need to calculate the total cost. Pay attention. Total cost. What is this total cost is equals to? It's very simple. Total cost is equals to purchase cost. Okay, how much is the purchase cost total plus ordering cost. Obviously I am talking about the total ordering cost, not ordering cost per order. So let's write the word total here and here also. Okay, so total purchase cost plus total ordering cost plus total carrying cost. Total. Okay, so annual demand is given to us. Pay attention. Annual demand is 50,000 units and consumption of raw material is 5,000 kilogram. Now sir, we are confused. What is this thing? If you remember in the question number 1 and 2, we discussed some points about the finished goods. See, whenever you calculate economic order quantity, it has to be with respect to the raw material, not with respect to your finished product. Now, out of these two, which one is your raw material? Sir, this one, consumption of material. Then, what is this annual demand? Sir, this annual demand of 50,000 unit is with respect of your finished goods. So, sir, why they have given us this annual demand 50,000 units of finished goods? So that you can get confused in the exam and you take this 50,000 in the calculation. So that means this is of no use at all to you. No use, not a single use we will make for this. Because whenever we calculate EOQ, it has to be with respect to only and only material, not your finished product. Okay. Now, after this, unit price is given. Okay, so consumption of material is 5,000 kilogram and nothing is given about the number of months. So, I will say that this is annual consumption of material. Okay, this is annual consumption. If suppose this is for per month, so just multiply it by the number of months. Now, unit price is rupees 20. Now, sir, what is this unit price? Nothing, it's your purchase price. Order cost is given 16. Now, this is your ordering cost per order. Storage rate is 2%, interest rate is 12%, obsolescence rate is 6%. Now, sir, what is this 2%, 12%, 6%? Now, forget the percentages 2, 12, 6. Focus on these words. When you read these words, storage, interest, obsolescence, does something come to your mind? Yes, think hard. When we were discussing the concept of carrying cost, I gave you the example that what basically is included in the carrying cost. Okay, so your storage cost, okay, then your obsolescence cost, then any funds invested in your inventory, on that your interest cost, that shall take part of your carrying cost only. So basically, storage, interest and obsolescence are part of your carrying cost only. Therefore, what is your total carrying cost percentages? 20%. And in the previous question, we discussed that whenever carrying cost is given in percentage, we apply it on purchase price, which is 20 rupees in this question. Okay. Now, let's calculate our economic order quantity. Okay. So, 2 multiplied by annual requirement of raw material is 5,000 kilograms multiplied by ordering cost per order. How much it is? It is 16 rupees and this is 5,000. Okay, unit price is 20. So just write it down here. It is 16 divided by carrying cost per unit per annum. So what is your carrying cost percentage? So carrying cost percentage is 20%, and we need to apply this on what? Purchase price. And how much is your purchase price? Let's see it again. Purchase price is rupees 20. So 20 into 20%. Okay. 20 is the purchase price into 20%, then root. Now let's calculate how much is the economic order quantity we are getting. So first of all, 20 into 20% is, this is coming 4. 2 into 5,000 into 16 divided by 4. Take root. So 200. Okay. 200 kilograms is my economic order quantity. Okay. This is my economic order quantity. This is the quantity at which my ordering and my carrying cost will be minimum. Now the second requirement of question was the calculation of total cost. Now pay attention on this part. How to calculate this total cost? Okay. This is the formula in front of you. So total purchase cost, just how to calculate total purchase cost, pay attention. Total purchase quantity multiplied by purchase price per unit. Okay. Purchase price per unit. How much total quantity we purchased of raw material in the entire year? 5,000 kilogram. What is my purchase price per unit? Let's see. I think it was 20. Yes, unit price is 20. Okay. So 5,000 into 20. This is my total purchase cost. Now plus total ordering cost. Now if you remember, how do we calculate total ordering cost? So total ordering cost is equals to number of orders multiplied by ordering cost per order. Okay, write the full form only. Ordering cost per order. How many number of orders we have placed? Sir, we don't know. So let's calculate the number of orders first. Okay. So how do we calculate number of orders? Sir, annual requirement of material divided by order size. Order size means your EOQ. Okay. Let me write here. Order size means your EOQ. And what is the annual requirement? Sir, annual requirement was 5,000 kilogram. EOQ we just calculated. See, 200 kgs. So divided by 200. So 5,000 divided by 200, 25 is the number of orders. So now we know number of orders 25 into ordering cost per order. How much is my ordering cost per order? 16. Okay. So 25 into 16. So 25 is the total number of orders which I will give in a year for acquiring 5,000 kilogram of raw material, and for each order I will spend 16 rupees. So 25 into 16, total ordering cost 400 plus total carrying cost. Now how do we calculate total carrying cost? Pay attention. Carrying cost per unit per annum multiplied by average inventory. Now how do we calculate average inventory? So there is a standard assumption, that is half of your ordering quantity or your order size. Now half of ordering quantity, how much quantity we are going to order? So 200 kilograms, that is our EOQ. So half of 200. So my average inventory is 100. See, this will be 100. What is my carrying cost per unit per annum? Sir, we calculated this. See, this is coming 4. So write down 4 here. So therefore, carrying cost per unit per annum is 4 and average inventory which you are holding is 100. Therefore, your total carrying cost is 400 rupees. Okay. So therefore, what will be your total cost? The final amount. Let's calculate. 5,000 into 20 plus 400 plus 400. This will be 1,800,000 rupees. This is your total cost. Okay. So what we did in this question is we calculated two things. Number one, EOQ. For EOQ calculation we saw especially this part, the rate of interest. How do we calculate this? Okay, we need to add storage, interest, obsolescence rate and just apply it on the purchase price. And then we saw the formula of total cost, which is equals to your purchase cost. And remember, whenever you are calculating purchase cost, you have to take the total purchase quantity, that is the annual purchase quantity, which is 5,000 in this question, multiplied by the purchase price. Then add total ordering cost, total carrying cost. How to calculate total ordering and carrying cost we just saw, else we have already seen in the previous sessions. Okay. So now please write it down, this question. Okay, write down all the arrow marks which I have given here and then just complete this solution. Okay. So students, let's begin with another topic in the chapter material. Now before we move into the next discussion point, okay, let's quickly go through again that what is this economic order quantity, what is this EOQ. Okay. So EOQ is any ordering quantity where total ordering cost and total carrying cost is minimum. Okay, that is your economic order quantity. Now pay attention and listen very carefully the next concept. Now let's see a simple example on the calculation of EOQ and just be patient. Okay, we will come to the main point in a bit, but let's first calculate economic order quantity based on this example, a simple example. Okay, so what is given to us? Annual requirement 50,000 units, purchase price per unit is rupees 50. This is a price at which you will purchase all these 50,000 units in a year. Okay, and ordering cost for each order, when you place one single order, rupees 5 you have to incur. Your carrying cost per unit per annum is rupees 2. So can we calculate EOQ? Okay, so what I would like you guys to do, just pause the video here and quickly calculate the EOQ. Okay, EOQ is equals to 2 into annual requirement of material into ordering cost per order, okay, divided by carrying cost per unit per annum. Now I'm writing the shortcuts, okay, short forms, but you have to write the entire formula. Okay, so therefore EOQ is equals to 2 into annual requirement is 50,000. Okay, ordering cost per order is rupees 5 whole divided by carrying cost per unit per annum is rupees 2. Take root of this. Okay, therefore let's calculate that how much is EOQ coming. So 2 into 50,000 into 5 divided by 2 and take root of that. So 500 units is my economic order quantity. Simple? Yes, very simple. Now listen very carefully to me. Okay, so suppose we are the buyers here. We are the buyers of raw material here. Okay, so should we buy all our quantity, this 50,000 units of quantity annually? Okay, and every time we should be ordering of 500 units with our supplier. Reason, because sir, if we are ordering 500 units each time, okay, what will happen? My ordering cost and my total carrying cost, both costs will be minimum. That's why this 500 unit is known as your economic order quantity. Simple. Now just so that you remember, this EOQ is also known as order size. Okay, order size means the quantity which you order at each order. Okay, the number of units which you order each time when you place an order is known as your order size, and EOQ means the quantity which you order each time. Okay, now pay attention. What happens? Let's write an additional point in this example. Pay attention on this point. Supplier offered a discount of 10% on purchase price. Supplier offered a discount of 10% on purchase price if quantity ordered is 1000 units or more. So what offer the supplier has given you here is if you are ready to buy from me 1000 units, okay, or more at each order, not annually, okay, at each order, if you are placing with me for 1000 units or more, I will give you 10% of discount on your purchase price, that is rupees 50. Now you are the buyer. Think about this. Do you have any confusion here? I mean, if something is coming to your mind right now, okay, then that means you understood the concept of EOQ very, very clearly. And what that something is, sir, we know that if we order 500 units each time, okay, our ordering cost and carrying cost is at minimum. But now supplier is saying that if we order 1000 units or more than that, okay, supplier will give us discount of 10% on purchase price. Now there is a confusion. Should I order 500 units each time, or should I order 1000 units or more than that? Okay, so because here the confusion is because the supplier is giving you a discount on the purchase price. Now pay attention. Suppose so this type of situation you get in the exam. So what will be the first thing which should come to your mind is, listen very carefully, if I order 500 units each time, what will be my total cost for the year, annual total cost. Then if I order 1000 units each time, 1000 units or more than that each time, what will be my total annual cost? So what we are going to do now, we will calculate our total annual cost. If order size is 500, total annual cost if order size is 1000 or more than that. Now then we will just compare these two annual cost. Okay, I hope you get the idea that what we are going to do now. Now let's do it. Okay, so pay really close attention. Okay, so this is the format. Now what we are going to do, we are going to calculate total cost at EOQ. What is my EOQ? 500 units. And then I will calculate total cost at 1000 units. Sir, but in the additional point it was given that 1000 units or more. So okay, yes, you will get the discount on purchase price if you are ordering 1200 units, 1500, 2000, 4000. But for the calculation purpose, I am taking the minimum, that is 1000, where you are getting the discount. Okay, fine. Now, so total cost at EOQ, and my EOQ is 500 units. You can see it here. This is 500 units. Now, what do you mean by total cost? So I will be writing this here, the formula. Total cost is equals to total purchase value plus total ordering cost plus total carrying cost. Okay, so let's calculate the total cost now. Pay attention. Point number A. So the first thing in our total cost is total purchase value. So first of all, let's calculate this. So write down total purchase value. So how do we calculate the total purchase value? Sir, it's very simple. Our annual requirement of material, which is 50,000 units, into purchase price. Okay, so you can see your purchase price is rupees 50, annual requirement is 50,000. Okay, so let's calculate 50,000 into 50. So this will come 25 lakhs. Okay, so first we will complete this side, the EOQ side. Now point number B. Now the second thing which we need to calculate is total ordering cost. Now how do we calculate total ordering cost? I hope you all remember the formula for total ordering cost. The formula is very simple. Let me write it here for you. Total ordering cost is equals to ordering cost per order multiplied by number of orders. Okay, please write the full forms, number of orders. Now, so I need to calculate the number of orders. Now how do we calculate number of orders? Let's write here. Number of orders is equals to your annual requirement, which is 50,000, divided by ordering quantity, that is 500. Okay, so 50,000 divided by 500, 100 number of orders you will be placing. Fine. Now what is my ordering cost per order? Let's see. Ordering cost per order. So that is given in the problem itself, rupees 5. Rupees 5. Okay. Now, can we calculate our total ordering cost now? Total ordering cost is equals to your ordering cost per order, that is 5, into number of orders 100. Therefore, 500 is your total ordering cost. Simple. Now, the third thing is the total carrying cost. The third part of your total cost is the total carrying cost. Let's calculate. But first, let me write how do we calculate total carrying cost. I hope you remember the formula. If not, just pause the video. Okay, go back to your pages and see what is the formula for total carrying cost. Okay, so formula is average inventory or average stock multiplied by carrying cost per unit per annum. Okay. Now, point number. Now, what is my carrying cost per unit per annum? Let's see in the question itself. That is rupees 2. Okay. Your carrying cost per unit per annum is coming rupees 2. Okay. Simple. And how do we calculate the average inventory? Average inventory is half of your ordering quantity. And what is my ordering quantity here? 500 units. Okay, ordering quantity is 500 units. So half of 500 units. So this will be 250. Therefore, point number G, what will be my total carrying cost? Sir, carrying cost per unit into average inventory. So 250 into 2 will give you 500 rupees. Okay. So this is your total ordering cost 500. This is your total carrying cost 500, and your total purchase value is 25 lakh. Therefore, what is my total cost at 500 units? Just add these three totals. Okay. So let's see the total. Therefore, point number H is equals to total cost. Okay. So total cost will be equals to point number A. Okay. Point number D and point number. Okay. So total cost is equals to point number A plus D plus, let's write. So how much it will be? 25 lakh is your total purchase value plus 500 is your ordering cost plus 500 is your total carrying cost. So it will be 25 lakh 1000 rupees. Okay. So this is your total cost, 25 lakh rupees 1000. Okay. So what we just did so far, that what is my total cost if we order 500 units each order. So my total cost is coming 25 lakh rupees 1000. Now let's make the same calculations again. Now pay attention, listen very, very carefully. Same calculations we are going to do, but this time, okay, but this time we will consider that our ordering quantity is 1000 units, not 500 units. Now let's just pay attention and see how the calculation changes. Okay, 100% attention on the screen now. So first of all, we need to calculate total purchase value. Pay attention, a very important calculation. So 50,000 units we are ordering. See, whether we order 500 units or we order 1000 units, annual requirement is 50,000. Okay. However, the change is, let's go back to the question. There is a discount of 10% on what? On purchase price. The discount of 10% is on purchase price. Okay. So pay attention now. The purchase value calculation will be now 50,000 rupees into 50. 50 is your purchase price. However, you are getting a discount of 10%. So from this 50, you need to reduce 50's 10%. Okay, so that will come 45 rupees. So 50,000 into 45, 22 lakh 50,000 rupees. This is your purchase value. So you can clearly see here that there is a reduction in the purchase value from 25 lakh to 22,50,000 rupees. Total reduction is 2,50,000. Your purchase value reduced by 2,50,000. But what will happen now? See, now every time when you are placing an order, the units are 1,000, not 500. So just before we do the calculation, think about it in your mind. Okay, you should have this habit of thinking first. If I am ordering 1,000 units every time, okay, my ordering quantity has increased, how this is going to impact the number of orders? Obviously, sir, now the number of orders will reduce. Okay, so now let's make the calculation. So my number of orders will be 50,000 divided by 1,000. Okay, so that will be 50. Okay, so 50 number of orders. Earlier it were 100, now it is 50. And what is my ordering cost per order? So ordering cost per order is 5 and it will remain same. So what will be my total ordering cost now? So total ordering cost will be number of orders, that is 50 into ordering cost per order 5. Okay, so that will be 250. So 250 is my total ordering cost and 22,50,000 is my total purchase value. Now let's move to the carrying cost calculation. What is my carrying cost per unit per annum? So this is 2 only. And what is my average inventory? That is half of ordering quantity. So half of, what is my ordering quantity? 1,000. So 500. Therefore, what will be my total carrying cost? Total carrying cost is equals to the average inventory, which is 500, into carrying cost per unit per annum, that is 2. So it will come 1,000. Okay. So as you can clearly see here, pay attention, your total carrying cost has increased and your total ordering cost has decreased. Okay, now what is the reason? Let's quickly discuss this. See, your ordering quantity has increased. Because of that, number of orders came down. Number of orders came down from 100 to 50. Therefore, your ordering cost came down from 500 to 250 rupees. But now what will happen, since you are ordering more? Earlier you were ordering 500, now you are ordering 1,000. Okay, you will be holding more. So your average inventory, earlier it was 250, now it is 500. And if you are holding more, see, your carrying cost gets doubled. It's increased. Okay. So now let's calculate the total cost. Point number H, total cost, which is A plus D plus G. So let's see, my total cost will be 22,50,000. Okay, that is the total purchase value, plus point number D, total ordering cost 250, plus point number G, that is total carrying cost 1,000. So total cost is coming 22,51,250 rupees. Okay, so that is your total cost if you place order of 1,000 units each time. Okay, so this is the summary of what we have just done. Pay attention. So if your order size is 500 units, your total cost was coming 25,01,000 rupees. However, if your order size is 1,000 units, okay, your total cost is 22,51,250. Now, deeper analysis we will do. So I want all of you just to pay attention. See, your purchase value has reduced, and what is the reason behind this? And the reason is, sir, very simple. We got the discount at the rate of 10% on the purchase price. That's why the purchase value got reduced. Your ordering cost gets reduced. Okay, your carrying cost gets increased. Okay, so this is reduced and carrying cost increased. But one thing I want you, all of you, to focus. See, your ordering cost and your carrying cost is how much at 500? 1,000. And what is your ordering cost and carrying cost at 1,000? 1,250. Now I hope you are getting the point here. This 500 is your EOQ, economic order quantity, and we know from our previous discussions that at EOQ, okay, the total of ordering cost and carrying cost is minimum, and this is the proof This is the proof. See, the total is 1000. Here it is 1250. You are paying 250 more if you order 1000 units. Okay. However, your total cost, see, has reduced. Your total cost earlier was 25 lakh 1000 rupees. Now it's 22 lakh 51,250. So it has reduced considerably. And why it has reduced? Because of this discount in the purchase value. So because of this reduction, how much savings we are making here? Let's calculate. 25 lakh 1000 minus 22 lakh 51,250. So therefore rupees 2,49,750 rupees. This is the saving I am making if I am ordering how much unit at once? 1000 units. If my order size is 1000 units, then I am making this savings. Okay, I hope you got the point here. That see what happens sometimes when you, okay, the EOQ is fine. At EOQ, your ordering carrying cost is minimum. But because of the discount given by the supplier, the total annual cost, which includes the purchase value also, okay, the total annual cost gets reduced, and then you have to change your decision. And okay, from 500 units, now it's a wise decision to order 1000 units, not 500. You are getting almost 2,50,000 rupees of discount. Okay, so with this, we came to a conclusion which I want all of you to write on your notebook. Write it down. The conclusion is, generally at EOQ, that is your economic order quantity, okay, total ordering cost, please write the full forms, and total carrying cost is minimum, and we select the same as our ordering quantity. So what I have written here, that is generally at the economic order quantity, okay, your total ordering cost and your total carrying cost is minimum, and therefore we select the same as our ordering quantity. However, write down the next point. However, if there is any discount offered by the supplier on purchase price, okay, on purchase price, then we need to calculate total annual cost. We need to calculate what? Total annual cost at EOQ, okay, at economic order quantity level, and the specified order size. Like in this question, we calculated the total annual cost at EOQ level of 500 and at the specified order size of 1000. Okay. Last point, select the quantity where TAC, please write the full form, total annual cost is minimum. Okay, so you need to select the quantity where your total annual cost is minimum. Okay, so in the question we just solved, first we calculated the total annual cost at EOQ level, then we calculated total annual cost at specified order size, which was 1000, and then we selected the quantity where our total annual cost was minimum, and that was 1000 units. Okay, we saved 2,49,750 rupees. Okay, so I hope this is clear now. Thank you. So please write down this conclusion, and also you need to write this information, and then you have to write this solution on your notebook. Okay, along with this summary. Hello students. So now we'll see one example, okay, on the concept of economic order quantity along with the discount offered by the supplier, okay, which we discussed in the previous session. Okay. So first of all, let's read the requirement of this problem. So the first requirement is what is economic order quantity, and we are very much familiar about what is economic order quantity. Okay, so this is the formula for calculation of economic order quantity. Okay, please write down this formula on your notebook. Now the second requirement of the problem is state whether the quantity discount offer can be accepted. So we'll see that after making the few calculations. Now let's see the information given in the question. Okay, so a company manufactures a special product. Now this special product which they manufacture is their finished goods. Okay, and I hope you all remember that in case of EOQ, we are not concerned about the finished goods at all. We are concerned about the raw material. So a company manufactures a special product which requires a special component. So this special component is your material, and the name of the component is alpha. The following particulars are given to you, like annual demand of alpha. So 8,000 unit is the annual requirement of component alpha, that is your material. Cost of placing an order is given, which is rupees 200 per order. So every time when you place an order, you need to incur rupees 200. Cost per unit of alpha. Now this 400 rupees is the purchase price of component alpha. Then carrying cost is given per annum, and this time this is in percentage. So I hope you remember that whenever carrying cost is given is in percentage, we need to apply this. Okay, we need to apply this on what? Purchase price. Okay, so therefore what will be my carrying cost per unit per annum? Sir, it will be purchase price, which is 400 multiplied by 20%. So it will be rupees 80. So rupees 80 is my carrying cost per unit per annum. Now after that, there is a note here. The company has been offered a quantity discount of 4%. Okay, now I hope you remember the concept of quantity discount, which we discussed in a very one of the earlier sessions. That quantity discount is a discount which is offered to the buyer when they buy a specific quantity or more than that. Okay, so here the discount percent, the quantity discount percentage is 4%, and it will be given to you provided the order size is 400 components at a time. So if your order size is 4,000 components, then go ahead and take a quantity discount of 4%. Now this quantity discount of 4% will be applied on the purchase price. Okay, so your purchase price per unit will reduce after this. Let's solve this problem. So first of all, we need to calculate the economic order quantity. This is the formula. I hope you have already written the formula. Okay, 2 into annual requirement into ordering cost per order, whole divided by your carrying cost per unit per annum, and do not forget the root. Okay, so 2 multiplied by, what is my annual requirement? So the annual requirement is 8,000 units. 8,000 units. What is my ordering cost for each order? That is rupees 200. Okay, whole divided by carrying cost per unit per annum. So we already calculated that. That is rupees 80, and a root. Okay, so let's calculate how much this is coming. So 2 into 8,000 into 200 divided by 80. Okay, and take a root. So your economic order quantity is coming 200 units. That means if you place the order of 200 units every time, okay, your ordering cost and your total carrying cost will be minimum. Simple. Okay, now let's see the second requirement of the question, which says state whether the quantity discount offer can be accepted or not. So should we accept the quantity discount offer of 4% on our purchase price per unit or not? So for that, what we need to do here is we need to evaluate. Now what you can do right now, just pause this video. Okay, go back to the video where we discussed the concept of discount by vendor. Okay, in that, when the lecture was over, I gave you a conclusion. at last. Okay, I gave you a conclusion. Just read that conclusion once. Okay, just read that conclusion once, then come back to this video. Okay, so what we need to do here is we need to find out our total annual cost. Okay, if we are ordering the economic order quantity, then we will calculate total annual cost if we are ordering 4,000 component, and then we will compare both the annual cost and see where it is minimum. Okay, now let's do this. This is the format, a simple basic format. So what we need to do, total cost at EOQ. Now what is my EOQ here? 200 units we just calculated. And what is my total cost if I am ordering 4,000? Okay. Now what do you mean by this term total cost? I hope you all remember, but still I'll write the formula. Okay. So the formula for total cost is equals to total purchase value plus total ordering cost plus total carrying cost. Okay. So this is the formula for calculation of total cost. Now let's get back to our solution. Okay. So the first thing which we need is total purchase value is equals to annual requirement. How much quantity of component alpha which we need annually? So that is 8,000, and what is the purchase price? 400 rupees. Okay. Okay. So 8,000 units into 400. So how much is my total purchase value? 8,000 into 400. That is coming 32 lakh rupees. Fine. Now next point number B. Now let's calculate number of orders. Now sir, why we are calculating number of orders? Pay attention, because in the formula of total cost, pay attention, total ordering cost is equals to number of orders multiplied by ordering cost per order. Please write the full form only. Ordering cost per order. Okay, so we need these two things. So therefore I am calculating number of orders. Now how do we calculate number of orders? So it's very simple. Annual requirement, which is 8,000 units, and how much quantity we are ordering at each order. That is, what is our order size? So order size is 200 units. Okay. So divided by 200. So how many number of orders we have to place? Sir, we need to place 40 orders. Okay, annually of 200 units each time, so that we can fulfill our requirement of 8,000 units. Very good. Now after this we will calculate ordering cost per order. Okay. And do we need to calculate this? No sir, it is already given in the problem. That is 200 rupees per order. Okay. So just write here 200 rupees. Fine. Now point number D. Therefore my total ordering cost is equals to number of orders 40, and what is ordering cost for each order? 200. So 40 into 200 is equals to 8,000 rupees. This is my ordering cost. Now the next component in your total cost is total carrying cost. How do we calculate carrying cost? So the formula is very simple. Average stock multiplied by carrying cost per unit per annum. Please write the full form only. And what is average stock means? This is half of ordering quantity. So point number E, average stock, half of ordering quantity. So how many units we are ordering? 200 units. This is my ordering quantity, which is also EOQ. Half of this. So that will be 100 units. Now what is my carrying cost per unit per annum? Is it given in the question? No. What is given in the question is the percentage, and we have already calculated that this percentage we need to apply on the purchase price. After this, my carrying cost per unit per annum is coming 80 rupees. So write it down, 80 rupees. So can we calculate our total carrying cost now? Yes, very easily. Total carrying cost is equals to your average stock which you are holding multiplied by your carrying cost per unit per annum. So it will be 8,000 rupees. Okay. Now pay attention. So this is my total carrying cost, 8,000 rupees, and this is my total ordering cost, 8,000 rupees, and this is my total purchase value, 32 lakh rupees if I am ordering 200 units each time, if my order size is 200 units. Okay. Total cost. Okay. So total cost is equals to total purchase value, which is point A, 32 lakh, total ordering cost, that's your point number D, 8,000 rupees, and point number G, total carrying cost, 8,000. Okay, so let's calculate total cost A plus D plus G. Okay, so 32 lakh plus 8,000 of total ordering cost plus 8,000 of total carrying cost. Okay, so 32 lakh plus 8,000 plus 8,000. So this will be 32 lakh 16,000 rupees. Okay. Okay. So this is your total cost, 32 lakh 16,000 rupees. So if we order 200 units each time, okay, the total cost which we need to incur annually is 32 lakh 16,000 rupees. Now what we will be doing is, we will calculate the same total cost. We will calculate the total cost only, but the only difference this time is our ordering quantity is 4,000 units, not 200 units. Okay. So first of all, purchase value. Now listen very carefully. If you are ordering 4,000 components, 4,000 units, see, you are getting a quantity discount of 4% on the purchase price. So what I will be doing now, annual requirement 8,000 into, okay, into 400, and from this 400 we need to reduce the discount percentage, which is 4%. So 400 into 4% is your discount. This is your discount. Okay, just apply, just minus, reduce that discount from 400, you will get your revised purchase price. So 400 minus 4%, so 384 is your revised purchase price into 8,000. Therefore 30 lakh 72,000 rupees, okay, is your purchase value if you are ordering 4,000 units and you are getting a discount on the purchase price. So you can see here very clearly that your purchase value has decreased. Obviously it will decrease since you are getting the discount. But the story is not yet over. Now we'll have to move further. Now how many number of orders we need to calculate? Now again, just stop and think about it. My order quantity has increased drastically from 200 to 4,000 units. So what will happen to my number of orders? Sir, my number of orders should decrease. Let's see. Annual requirement divided by your ordering quantity, which is 4,000. Therefore, now you have to place only 2 orders. See, earlier you were placing 40 orders. Now your orders are only 2. So definitely your ordering cost is going to reduce. Okay. So what is my ordering cost per order? That is 200. It will remain same. Therefore, what will be my total ordering cost? 2 into 200. See, it's just 400 now. It is just 400. Earlier it was 8,000. Now it is only 400 rupees. This is your total ordering cost. Now let's move to the next cost, that is carrying cost. So how do we calculate the carrying cost? So first we need to calculate the average stock, which is half of ordering quantity, and ordering quantity is 4,000. So you can clearly see now that your average stock held has increased. Earlier it was only 100 units, which you were carrying, holding. But now on an average you are holding 2,000 units. So sir, one thing is clear, that our carrying cost is going to increase drastically. Okay, now I want everyone's 200% attention on what we are going to discuss. So we saw this earlier, that in order to calculate the total carrying cost, okay, this is the formula. average stock into your carrying cost per unit per annum. So we calculated average stock using this formula. Okay, now come to this carrying cost per unit per annum. Now sir, what about this? So pay attention for this. We'll go back to the problem. There is a quantity discount of 4% on your purchase price if you order 4,000 component. Okay, and we are ordering 4,000 components. We are doing the calculation for that section only. And what is my purchase price? 400. Your purchase price is 400 and there is a discount of 4% if you order 4,000 component. Okay, so what will be your revised purchase price? See here, when we calculated the purchase value, okay, total purchase value, we calculated our revised purchase price 400 minus 4% of 400. So if you calculate this, you will get your revised purchase price, which is 384. Okay, and we also know that the carrying cost, when it is given in percentage, okay, when it is given in percentage, apply this on purchase price. Apply this on what? Purchase price. And if you are ordering 4,000 components, see, your purchase price has reduced because of discount. So if your purchase price has reduced because of discount, don't you think that your carrying cost per unit per annum will also change? Yes. Okay, so for that, I'll just make this calculation here. Pay attention. Okay, how do we calculate carrying cost per unit per annum? If it's given in percentage, we apply the percent on purchase price. What is the percentage of carrying cost? 20%. So 20%, okay, of my purchase price. And what is my revised purchase price? 384. So one thing is now clear, that, and listen very carefully this point, because the previous question which we solved of discount, in that question, the carrying cost was already given to you. What is your carrying cost per unit per annum? Okay, so there is no change in that. But here, what's happening? The carrying cost is given in percentage and percentage is applied on the purchase price and your purchase price is revised. So therefore, your carrying cost per unit per annum will now 384 into 20%. That is 76.8. This is your carrying cost per unit per annum. Earlier it was how much? 80. Now it has reduced. 76.8. Now therefore, how much will be your total carrying cost? It will be average stock, which is 2000 into 76.8. Okay, so your total carrying cost will be now 1,53,600. So you can clearly see here that your total carrying cost has increased drastically. And reason is this. See, your average stock has increased so much. Because of that, your total carrying cost has also increased. Now see, we have calculated total purchase value, which is 30,72,000. Total ordering cost 400 and total carrying cost 1,53,600. So now let's calculate the H point, which is your total cost. Okay, so your total cost will be 30,72,000 plus your ordering cost, which is 400 plus 1,53,600 carrying cost. Let's see how much this is coming. So this is coming 32,26,000. Okay, this is your total cost if at each order, okay, at each order you are placing 4,000 components. Okay, now pay attention. So at 200 units, if my ordering quantity is 200 units, my total cost is 32,16,000. If my ordering quantity is 4,000 units, okay, my total cost is coming 32,26,000 rupees. So let's go back to the question and see what was the requirement. So sir, the requirement was state whether the quantity discount offer can be accepted. Just pause the video right now and think about this. Should you accept this quantity discount offer or not? Okay, so this quantity discount offer should not be accepted. Why? Because if you order, okay, if you order the economic order quantity, which is 200 units, this is your total cost. If you order 4,000 component and you get a discount on purchase price, your total cost is coming 32,26,000 rupees, which is more by 10,000 rupees. 10,000 is your extra cost if you are giving order of 4,000 component every time. So we should, okay, so let me write the line here. Therefore, discount offered by the supplier should be not, okay. So we should not accept the discount because our cost is getting higher by 10,000 rupees and we should keep ordering the 200 units. We should call the supplier and tell the person, listen, we are very much happy with our 200 units of economic order quantity. We do not want your offer of 4,000 components and get a discount. Okay. So please write down this problem. Okay. Write down this problem along with the notes. Okay. The arrow marks and then this solution also. Make this solution. Okay. And this calculation also you have to write on your notebook, especially the calculation of this 76.8, that is your carrying cost per unit per annum in case you get the discount. Okay. Hello students, let's see another topic in your material chapter. So inventory control, okay, which we had already discussed. Okay. Now what happens in inventory control? We try to control the inventory under different methods. Okay. And the first method, which is a very, very important method, is where we set different inventory levels. Okay. For example, maximum level, minimum level, etc. Now, what the purpose of this video is, we will be discussing a very, very simple, very casual example. Okay, so that we can get a basic understanding of, okay, what is maximum level, what is your minimum reorder level, your danger level, just a basic understanding. Okay, and in the next coming recordings, you will have an in-depth understanding of those levels in case of business organizations along with the formulas. Okay, so let's see. So you can see this picture in front of you on the screen. So this is basically your fuel indicator. So what is the purpose of fuel indicator in your two-wheeler or in your four-wheeler? Sir, it indicates the level of fuels. It indicates different levels of fuels. Okay. For example, suppose this green area. This is a very good level. So basically you have abundance of fuel in your fuel tank. Yellow, fuel is little low. Then see this color, mustard color. Again, fuel is little low. Now this color, orange color, fuel is getting very low. And now, and last, the red color. That means the fuel is going to be empty very soon. So with the help of this, we will understand different levels. So pay very close attention. Okay, after the end of this video, you will have a good understanding of what these levels are. Now let's start with this F, this. So can I say that this is my maximum level? Yes, sir, we can say that because we cannot fill the fuel tank beyond this point. This is the maximum I can fill the fuel tank. So this is my maximum level, simple. Can I say that this point, okay, at this point, what I would be doing is, just imagine that suppose this, okay, indicator, it is at this point. What will you do? Sir, we will try to fill the tank again, because at this point, okay, I will be basically understanding, okay, our understanding will be like that now the fuel is getting less. So if I don't want to face the situation of this empty point, okay, let's fill the tank again, maybe tomorrow, maybe after 3 days or 4 days. So this is basically is your reorder level. Okay, at this level you will go and fill your tank again. So far we have seen two levels. One is your maximum level. Okay, you cannot fill your tank beyond this point. Then your reorder level, it is the level at which you will again fill your tank. And after reorder level, this one, okay, this is I will consider as my minimum level. Sir, what do you mean by this minimum level? It means at any point of time, I don't want the fuel in my fuel tank to be less than this. Okay, I'm a very conservative person. So what I want, okay, I want to be always on a safer side. Okay, so I don't want the fuel in the fuel tank below this point. I don't want to go in this orange and red situation. So I'm keeping this as my minimum level. Now let's come to the next point. This level is my danger level. Why this is a danger level? I hope you understand after seeing the color. This is a danger level, sir, because if you have a fuel in your fuel tank at this level, that means your fuel tank is going to be empty very soon. So this is your danger level and nobody wants to come at this level. And this is your last point, that is empty. That means your petrol is finished. Now go and drag your car. Okay. So with the help of this fuel indicator, we saw some levels. Number 1 is the maximum level. Number 2 is your reorder level. At this level, you will again go and fill that fuel tank. Then come your minimum level. This is the level of petrol which I want in my fuel tank always. I mean, I don't want to go down beyond this level. This is my minimum level. And this is the danger level. Danger level. If I have a petrol at this level in my fuel tank, then it's a very dangerous situation. Okay, anytime your fuel can get empty. Okay, so at danger level, pay attention, at danger level, generally I will try to avoid going any places. Because I know this is a danger level. Now the fuel is already very less. So my main purpose will be to go out and just fill the tank, and maybe only for the emergency purpose I will take out my vehicle at danger level. Okay. Now apart from this, let's say in my car at the back side I keep this bottle. I keep this bottle, and this bottle is of 5 liter. Why you are keeping this bottle of 5 liter? In this bottle we have petrol. So I am keeping this petrol 5 liter with me at the back of the car always. Why? Because this is my buffer stock. This is my buffer stock. In case of emergency, suppose the petrol goes down beyond danger level. Okay, it goes beyond danger level. Now the petrol is not there, empty. I can use this buffer stock. So in case of situations like this buffer stock can be used. Now pay 200% attention. What you are seeing in front of you, same thing happens in case of manufacturing organization and other organization. They also keep different stock levels of their inventory, of their material in their warehouse. Okay, so they have to set, they have to decide. See, in case of this indicator indicates us that this is your reorder level, this is your minimum, this is your danger level. So we know. But in case of organizations, they have to set these levels. So what's our duty here is, as a student, we need to learn how to set maximum level of inventory, how to set reorder level of inventory, how to set minimum, how to set danger level, how to set buffer stock level. So that, okay, so that we know in time that when to place the reorder of material again. Okay, what is the danger level? Okay, that we will learn in inventory control first section. So I hope with the help of this example, a basic understanding is now there. In the coming session, we will have in-depth understanding along with formulas of these different levels. Okay. Hello students, let's discuss the other concept in the chapter material. Okay. So the name of the concept is maximum stock level. And what is maximum stock level? This is the highest level of quantity for any material. Okay, so for any raw material, okay, what should be the highest level in your godown or in your warehouse or in your store? Okay, this is the highest level beyond which you don't want to go. Okay, now let's discuss this with a simple example. So for example, this is your warehouse. Okay, warehouse, godown, storeroom. Now in this warehouse, you keep your raw material. Let's say you said that, sir, this is the level beyond which, okay, beyond which I will not store the material. So can I say that this is my maximum stock level? Yes, sir. Okay, this is the level beyond which I don't want to store material. Now, before we see that how to calculate this maximum stock level, a simple thing to understand, why you don't want to store the material beyond this maximum stock level? Simple answer, because sir, if we store material beyond maximum stock level, then unnecessary holding cost we need to incur. Simple logic. If you are keeping the stock more than your even maximum stock level, then you are holding it unnecessarily. No? There is no requirement of that. So unnecessarily you will incur some holding cost. For example, the interest cost. Okay, I hope you remember the concept of holding cost. Then your obsolescence cost. These are some costs which you will incur unnecessarily. So to avoid such cost, such unnecessary cost, we will keep the stock at this level, which is your maximum stock level. But the question is, sir, how do we know that this is the correct maximum stock level? For that, now we will understand the concept of maximum stock level. Okay, now pay attention. So for example, this is your reorder level. I hope you remember the reorder level. If not, just pause the video, go back to the video of reorder level, quickly see it and understand what is reorder level. Okay, now this is my reorder level. This is the level at which we place the order for quantity. Okay, and the order which we place is known as reorder quantity, and if your ordering cost and carrying cost is minimum there, then this reorder quantity will become your economic order quantity. Okay, now let's say my reorder level is 4,000 units. Okay, and my reorder quantity is equals to 2,000 units. So okay, so in my warehouse, when the material level touches the 4,000 units, when I have 4,000 units in my warehouse, I call my supplier and place the order, that is 2,000 units. Let's say the supplier delivered the raw material instantly, like let's say within 1 hour or 2 hours. How much of material then you have in your stock? Then you will say, sir, we will have 4,000, that is a reorder level. Then within few hours we got 2,000, that means now we have 6,000 units. So that is 6,000 units is my maximum stock level today. Today when I came to office, the stock level was 4,000. Then I placed the order, I got 2,000. So maximum is 6,000. But do you really think that you receive the order within 1 or 2 hours? No, that's not some household grocery that you are ordering here. Okay, this is your raw material. The quantity is huge. So your supplier generally takes some days, which is known as reorder period, okay, to deliver you the material. So let's extend the example further. Pay attention. Okay, so one thing is clear, that this is not my maximum stock level. Remember. Okay, I hope you got this point, that why this is wrong. Now pay attention. Let's say that your minimum consumption, please write the full forms, your minimum consumptions per day of raw material is 100 units. That means every day you are consuming how much? You are consuming minimum at least 100 units, and your maximum consumption per day is equals to 200. So minimum you are consuming 100, or maximum it can go up to 200 units per day. Fine. And your minimum reorder period, okay, is let's say 10 days. Now sir, what is reorder period? Those who don't know, reorder period means the days, okay, the days between placing the order and receiving the order. This is the time which supplier takes to deliver you the material. And this is also known as lead period. I want you guys to write the name lead period also when you are making the notes, and highlight this word lead period. Okay. So minimum reorder period is 10 days and maximum reorder period is equals to 20 days. Okay. So that means every day I am consuming minimum 100 units and it can go maximum 200. And the minimum time which supplier will take is 10 days and maximum the supplier can take 20 days. Now listen very carefully that why we have written this information here. At this level, reorder level, you place the order. Okay, so at 4,000 units, when you place the order for 2,000 units, it will take some time. Okay, it will take some time before these 2,000 units will come to your godown. And during that some time, you will consume these units. Yes or no? The consumption will go on. Production will not stop. Na? You will consume during those days. So let's say if your reorder period is 10 days, minimum, I'm taking the minimum. So next 10 days, you will consume some units. Let's say your reorder period is 20 days, worst situation. Then for the next 20 days, you will consume. So in order to calculate that what is my maximum stock level, how much should I kept the maximum stock level, what I should be doing is reorder level plus reorder quantity minus the consumption during the reorder period. That will give me my maximum stock level. But sir, there is a problem. We have two consumptions per day. One is minimum, one is maximum, and two reorder periods. One is minimum and one is maximum. Which one to take? For that, I am showing you one example, and after that example, trust me, you can give the answer on your own also. Okay. So my reorder level, okay, let me write down this formula first. So reorder level plus reorder quantity, please write the full forms here. How much is my reorder level? Sir, it is 4,000 units. Fine. How much is my reorder quantity? 2,000. So sir, my maximum stock level is 6,000. No, because when you receive these 2,000 units, during that period you will be consuming. Okay. How much you will consume? Let's do one thing, sir. Let's assume that we are consuming minimum quantity and reorder period is minimum. So that means 100 units you will consume every day for the next 10 days. So that means 1,000 units you will consume. 1,000 units you will consume. Pay attention. At reorder level, you place the order to your supplier for 2,000 units. Okay. Then you will consume your material every day. How much? Sir, every day 100, 100, 100 for the next 10 days. Then you receive your 2,000 units order. So when you place the order, you have 4,000. For the next 10 days, you will consume 1,000. How much you have now? 3,000. Then you got your 2,000 units. So what should be your maximum stock level? Just add these two and minus 1,000. That is 5,000 units. Simple? Logical? Yes. Now let me give you one more example to confuse you guys a bit. But trust me, after this, you will understand this concept in a very good way. So reorder level plus reorder quantity. How much is my reorder level? 4,000 and reorder quantity is 2,000. But sir, there is a problem. What is problem in this? You are assuming that you are consuming only 100 units per day. What if my consumption is not minimum but maximum? What if next day, every day I am consuming 200 units and my reorder period is also 20, the maximum reorder period. Okay. So what we are going to do now, minus, now what I am assuming, pay attention, listen very carefully. At reorder level, okay, at 4,000 units level, I place the order of 2,000 units. Now I am waiting to receive these orders. And what I am assuming, that for the next 20 days, which is the worst case scenario, the maximum reorder period, I am consuming the maximum consumption per day, that is 200. So for the next 20 days, every day I will consume how much? So 20 into 200, that is 4,000 units. So reorder level, at 4,000 units, you place the order. Okay, now you are sitting and you are consuming your material for the next 20 days, 20 days, 20. Okay. How much you consumed? 4,000. So out of 4,000, 4,000 gone, then suddenly you received your reorder quantity of 2,000. So how much stock now you have? Sir, 2,000 units. This is your maximum stock level. Now you must be confused. Why? Because, now listen very carefully. Sir, how is it possible that if my reorder level is 4,000, okay, my maximum stock level is 2,000? How this is possible? Seems illogical, totally illogical. That means, sir, while calculating the maximum stock level, we should reduce only the minimum consumption multiplied by minimum reorder period. So your maximum stock level is 5,000, which is more than your reorder level. This is the correct solution. Okay. So can we create the formula now on our own? Now what I would like you guys to do, just pause the video, okay, and try to write the formula, okay, then resume the video, and this is your formula. So maximum stock level equals to reorder level, please write the full forms, plus reorder quantity, okay, minus minimum consumption per day multiplied by minimum reorder, okay. So this is your formula, and concept also we have understood. Please write down this formula in your notebook. Okay, so now let's discuss another concept of minimum stock level. So far we know what is reorder level, we know what is reorder quantity, that is your economic order quantity, also known as order size, and now we know what is maximum stock level. Now let's come to the minimum stock level, which is very simple. So minimum stock level is the lowest level of material stock, lowest level of material stock in your godown, in your warehouse, or in your storeroom at all the times. So this is the level of material in your godown or warehouse storeroom which you have to keep each and every time. That means in any situation, okay, in any condition, in any situation, your material level should not go beyond the minimum stock level. Now the only one question remains here, that's how do we calculate this minimum stock level? So yes, there is a formula, but before formula, let's discuss the logic. Okay, so this is your warehouse. Okay, we know what is maximum stock level. Okay, we know what is reorder level. Okay, now we are discussing this, that is your minimum stock level. Okay, now at reorder level, how many units we have at reorder level? Sir, we have 4,000 units. Pay attention. At reorder level, we have 4,000 units. Now, at reorder level, you will also place the order to your supplier, but before the order comes to you, okay, you will consume the raw material. Definitely, sir, we will consume it. We will not wait for the supplier to deliver. Now, we will consume. We have 4,000 units, so we will start consuming it. We will consume on daily basis. Yes, go on. You are consuming. Now, pay attention. Suppose your material level reaches at this point. Which point? Pay attention very, very closely. Suppose your material level reaches at this point, and then you received the order from your supplier. Tell me, just think about it and tell me, will you feel little panic? I mean, before receiving the order from supplier at this point in the morning, will you be feeling panic, little panic? Yes. Why? Because, pay attention, your material, your inventory is going to be, I mean, you are going to face the situation of what? Stock out. Just imagine that on this day also, you haven't received the material from your supplier. What will happen next day? So next day, no material. Production will stop, and no manufacturer wants to stop their production. It's a very, very bad situation, which we will discuss later on. Okay. So if you receive at this point, that's a very, very bad situation. So as a manufacturer, what do you want? Sir, I want that at any point of time, my stock level should not go beyond this point, this line. Okay, I mean, I'm just keeping my material on a very safer side. Okay, so at any point of time, my stock level should not go beyond this line. That is your minimum stock level which you have to keep each and every time. Now the only question remains that how we are going to calculate this. Okay, so now we'll see that part. Pay attention. So in the previous topic, that was maximum stock level, we saw this. The minimum consumption was 100, maximum was 200. Minimum reorder period was 10 and maximum was 20. So I'm continuing with this example. So pay attention. Suppose at reorder level, that is 4,000 units, you place the order to your supplier. Okay. Now you will start consuming. How much you will consume? So let's say that we are consuming 100 units per day. That means we are talking about minimum consumption. Okay, this is your minimum consumption. And let's say you are saying that your reorder period, the time within which you will receive the material from your supplier, is also minimum. Okay, that is your minimum reorder period. Please write the full form, is 10 days. So what you are saying here is, at reorder level, when you place the order to your supplier, okay, supplier will take 10 days at least to deliver the material, and during those 10 days you will consume 100 units every day. So how many units you will consume? Total 1000 units you will consume, and then you will receive your order. Okay, then you will receive your order. So everything is fine now. So what should be your minimum stock level? How much stock you should keep then? Sir, we order at 4,000 and for the next 10 days we will consume 100. So total 1000. Therefore, my minimum stock level should be my reorder level minus minimum consumption per day into minimum reorder period. That is 4,000 minus 1,000 is equals to 3,000 unit. This should be your minimum stock level which you should have in your inventory, in your godown at all the times. But sir, there is a problem. What if we are not consuming this minimum 100 units minimum reorder? What if we are consuming the maximum? What if we are consuming maximum and not minimum? That means, what is your consumption every day now? 200. What is your reorder period? 20 days. Therefore, how much units you will consume during those days? Okay, during those 20 days is 4,000. Now, your reorder level is 4,000 and to the next 20 days you will consume total 4,000. How much stock now you have in your minimum? Okay, pay attention. You will say, sir, therefore, my minimum stock level is equals to reorder level minus maximum consumption per day, write the full form, into minimum consumption. Maximum consumption per day multiplied by maximum reorder period. So therefore, 4,000 minus 200 into 20. How much? Sir, this is coming 0. Now think about it. Can you keep your minimum stock level 0? Impossible. Illogical also. That means this is not the right form. This is not the right one. Okay. So what we do, okay, in case of calculation of minimum stock level, okay, pay attention, we take everything on average basis. Okay. The consumption, we will take the average consumption. Reorder period, we will take the average reorder period. So basically what we are saying here, that at reorder level, yeah, or after reorder level, we will consume the average, okay, and we'll have the average reorder period. So pay attention. What is your average consumption days, sir? How do we calculate average consumption days? It's very simple. Minimum consumption plus maximum consumption divided by 2. How do we calculate the average reorder period? Minimum reorder period plus maximum reorder period whole divided by 2. That's it. Okay. So what is the minimum consumption? 100 plus 200 divided by 2. This 10 plus 20 divided by 2. So how much you are getting? 150 is your average consumption per day and 15 is your average reorder period. Okay. Therefore, what will be your total consumption during the reorder period? 150 into 15, that is 2250. Therefore, what will be the formula for minimum stock level? Sir, it will be reorder level. Okay, write the full form in bracket, average consumption per day multiplied by average reorder period. Okay, therefore, reorder level is 4000 minus how much is average consumption? We just calculated 150, average reorder period 15. See this, 150 and 15. Okay. So, therefore, what should be your minimum stock level? 4000 minus 2250, 1750 unit. This should be your minimum stock level. And this is your correct answer. Okay. Not this one and not this one. So, please don't write these two. Okay. Just write this example and write down this last formula. This is the correct formula for minimum stock level. Okay. Okay, now let's discuss another topic in your chapter material, which is very simple. Name is average inventory level. Now, average inventory level is also known as your normal stock level. Okay, so this is the stock level which we should which we should keep in our warehouse at all the times on an average basis, on normal basis. Now, the only thing remains is how do we calculate this average stock level, which is very simple. Pay attention. The formula is opening inventory or opening stock plus closing inventory whole divided by 2. This is the formula for calculation of average stock level. Now, there is one more formula. Let me write it down. Minimum stock level. Okay. Minimum stock level plus half of reorder quantity. Okay, so this is another formula which you can calculate your average inventory level. Now, which one to use in the exam, sir? Okay, so the first priority you should give to this and second priority to this. Okay, but if in the question they are specifically, they have given you the information about minimum stock level, reorder quantity, then go ahead and use directly this second formula, otherwise formula number 1. Okay, now its formula number 2 is very simple. See, what we want to calculate here, the average, how much inventory we should keep all the times. We saw how much should be kept maximum. We saw how much should be the reorder level. Then we saw how much should be kept minimum. Okay, now we'll see how much should be kept on an average basis. Okay, so that is my minimum stock level, because we cannot go beyond it. Minimum stock level plus whatever quantity I am ordering, half of it I am assuming I am keeping with me in the warehouse. So, half of your reorder quantity, just add your minimum stock level to that. Okay. Now, the next concept is danger stock level. Pay attention. What is your danger stock level? Sir, normal issues are stopped, only emergency issues. That means danger stock level is that level. Let's say this is your danger stock level. Okay. So, danger stock level is that level of stock in your warehouse, or you can say that when your stock, when your material, when your inventory reaches this level, okay, you will stop issuing the material for any normal requirement. Only the emergency requirement will be fulfilled. Okay, so this is that level in your warehouse where you will stop issuing the inventory material, okay, for any normal consumption in your factory. Okay, but if there is any emergency requirement, then you will issue from the danger stock level. Now, let's see the formula for danger stock level. Average consumption lead time for emergency purchase. Okay. So, what is this lead time for emergency purchase? This means, sir, see what happens sometimes when you don't have sufficient stock in your godown and you place order to your supplier in case of emergency, the lead time could be little earlier than the maximum lead time. Okay, they can deliver you the goods on quickly. Okay, so this is the formula. Now in case of average consumption, this star mark I have added here. In case of average consumption, you can also use minimum consumption. Okay, so if in the question average consumption is not given but only minimum consumption is given, okay, you can use that in this formula. That is your danger stock level. Okay, now the next concept is your buffer stock level. Now what is this buffer stock level? Pay attention. This is the stock kept for contingency to meet sudden demand. So what is buffer stock? Buffer stock is a stock which you are keeping with yourself in case of any emergency. So if there is any contingency, if there is any emergency, you can use your buffer stock. Okay, so that you can fulfill the sudden demand. Is there any formula for buffer stock? No. If in any question it is required, then the amount of the units of buffer stock will be given in the question itself. Okay, there is no formula for this.